Hello, everybody, again, here in Yaja, in Barcelona. Welcome to the Dextools Festival.
Buenos días. Bienvenidos al Dextools Festival 2024.
We are very, very happy to be here. It's our second edition. Thank you for supporting us, everybody. I know that many of you actually was around us the whole year. We've been preparing for this second edition. It wasn't easy. We're still running around. If something, please bear with us. There are going to be so many surprises, so many good emotions, and good networking, and interesting talks, and interesting sessions, and you're going to enjoy, I really hope. That's why you are here. Please build relationships. Please start with personalities. Don't just go and give out the business cards to whoever and whatever. Start with the people, because you are the people, and we love you, and we want you to also love one another. We want you to have the best time of your life this weekend with us. And I pass to Jorge to explain this in español.
Bueno, yo voy a intentar traducir todo lo que dice ella, ¿vale? Pero básicamente es gracias a todos por haber venido. Esperemos que lo disfrutéis tanto como lo vamos a hacer nosotros, porque la verdad que haber formado parte de la creación de esto es increíble, como el espacio en el que estamos. No sé si habéis estado alguna vez en un sitio como este, pero yo aquí pienso, madre mía, estoy como en una catedral, ¿no? Esto es impresionante, ¿no? O sea, ¿estáis flipando igual que yo o es que soy yo que estoy...? La verdad que es increíble veros aquí a todos, saber que lo vais a disfrutar muchísimo, que vais a encontraros a ponentes de altísimo nivel, así como artistas de altísimo nivel, ¿vale? Esperemos que esta edición del Dextools sea igual de buena que la anterior, incluso más, ¿vale? Por eso la hacemos. Y poco más, ¿vale? O sea, disfrutarlo, vivir la experiencia y esperemos que todo salga súper bien y que podamos estar todos felices.
Claro. But this whole thing will not be possible without our best sponsor, our mother company, the Dextools. And I want to invite to the stage Javi and Frederic, the founder and co-founder of the Dextools, to give their couple of words to you and welcome you warmly.
Un muy fuerte aplauso, por favor.
¿Empiezo yo? Hola, hola. Se me escucha, ¿no? Bueno, yo voy a hablar en español. Prometí el año pasado mejorar mi inglés. Lo he hecho, ¿vale? Pero todavía no estoy preparado del todo. Quizás el último día con un poco de alcohol igual me animo. Daros las gracias a todos por estar aquí otro año, esta segunda edición, que creo que va a ser todavía mucho mejor que la del año pasado. Más charlas, más networking, sobre todo más fiesta, más música y sobre todo muchas sorpresas. Aquí nos han preparado estos dos chicos, de los cuales me siento muy orgulloso, mi hermano y Vasilisa, los codirectores del festival, que me gustaría que le dierais un fuerte aplauso para ellos.
Thank you.
Gracias, Oro.
Y nada, no me quiero extender mucho más. Tengo aquí a mi socio Eric, que os hablará en inglés, o eso creo. Y muchas gracias de verdad. Y como iba a decir Jorge, pero no se ha atrevido, que empiecen los juegos otro año más.
Eso es.
Yeah, I subscribe everything Javier just shared. I appreciate a lot that you, especially that people that comes from very far, that you have the time and the effort to be here today, just to learn, just to enjoy. Welcome to Spain, welcome to crypto for many of you, and thanks for sharing these moments with Dextools, with the community of crypto in Spain. And I hope that you are learning a lot, enjoying, and well, just having fun. It's like a lot, and thanks to Jorge and Vasilisa too for the organization. Thank you very much.
That's all.
Thank you so much, and we're going to start.
Yep. Bye, bye, bye.
Gracias a todos, chicos.
Hey guys, here again. I'm going to explain a bit everything about Dextools, how we born, how we created this tool for every of you, for those that are still into DeFi trading and don't know the tool a lot. And I'm going to highlight a bit also the following things that we are going to do, the roadmap and everything. As the title says, we are the world's leading APP for decentralized finance trading, DeFi. And what is Dextools? Well, Dextools started in 2020 as a solution for DeFi traders that wanted to have all the information available in one place for the DeFi trading. With the starting of Uniswap v2 and all the pool systems in DeFi, those decentralized exchanges that didn't have charts, they didn't have order books, all the information in which the users were used to using in the decentralized exchanges, we try to bring all that information to DeFi. And how we do that? We read directly the information from the blockchain, from several sources, like social media, the teams of the tokens, the launchers, and the DEXs itself, and we put it into a friendly, user-friendly interface so you can do your trading without the need to check several sources that are, well, make you lose time, make you lose the focus on which is important, that is the information, follow the trading in real time especially, and have all the information together to make better decisions in terms of trading itself. We offer like a set of tools, charts, of course, transactions, and everything you need for your daily trading, including parameters like liquidity. That is very important in DeFi because the liquidity is what allows you to know more or less the health of a token in terms of what amount of money you can put in and what amount of money you can receive it yourself. If the liquidity is very low, those amounts are lower. So the possibility of a big gains is also lower. So with all of this data, and especially focusing a lot because we saw also a big problem into DeFi, and is the growing of several types of scams. In centralized exchanges, I'm not a real user of that, but they did a very good thing, that is this curator and this verification of the tokens they list. So more or less, there were types of scams, but they were not so common, like in DeFi. In DeFi, they launch thousands of tokens, we can say, per day. Many of them are scams. Most of them are scams. So in the first times of DeFi, 2020, there was not a real way to check or verify if a token was a scam or not. Even if you are a dev, you need to go to the contract and read the smart contract of every token to know if it contains malicious functions, if it's a honeypot or others. We faced that problem, but for the average user, that was impossible. It was impossible even to reach the social media of the token, to know the team, to know if, of course, if it's a honeypot, if the token has a fee or many other parameters. And because of that, we realized that we had to do something, and we integrated several types of verifications. Everything is automatic, everything is on-chain. So we created the DEXT score. DEXT score is our algorithm and the score of the token, in which we assign a number to every token of the reliability of that token in terms of, well, several parameters that we are reading, social media. Of course, if a token, they didn't even have a website, it's likely that they are not going to last longer. So that's the point, the main point. Number of transactions, number of holders. Usually the more holders that a token has, the more legit it is because it's widely spread, and it makes it less possibilities of them disappearing from one day to another. We included also, of course, token auditors, external and agnostic external auditors, so we don't touch that data in any way. We can't manipulate it because there are third parties, like trusted parties. We collaborate with Go+, we collaborate with Quick Intel, Honeypot, and many others that we have integrated. And from all these audits, we create our own audit that is the average of them. Because if one auditor says that a token is a honeypot, and two are saying that it's not a honeypot, there is a disagreement there, and we need to check who is the real one. But that's why it's important for the final user also to check all the information and take your own decision about what information is good or not. Usually, we do a good way catching the most common type of scams. Even despite of that, the scammers are also a thing. And they are constantly improving and trying to take advantage of these auditors and trying to cheat them. So they cheat the auditors and even they cheat us, of course, because of that too. So that's the main thing. And it's important to check this kind of parameters so to avoid the scams and to have a more constant, more profitable trading. Well, a bit of numbers. We are a platform that is integrated. Well, we're not integrated. We are everywhere in the world. We have users for, I will say, that all the countries in the world, even from regions that are not countries. I checked it last day, and we have users from Antarctica. So I don't know who is checking Antarctica at Dextools, but we have some DGen scientists there looking at the penguins and looking also to Dextools. So yeah, despite of these 2 years of bear market, we kept a very good average of 1 million daily visitors, unique users 500K. We integrated a lot of blockchains, more than 100 at this moment, 14,000 DEXs, 5 million pools, 7 million tokens. I have to say that from these 7 million, I will say that less than 1% are still alive. So from 7 million tokens, we have like 50K that are still active today. Most of the other ones are still there because it's the blockchain and they are going to be there forever, but they are dead with no activity. So yeah, and we have an average of 10 minutes of duration watching Dextools because people like to watch their investments all the time. This is similar or even higher to other websites like YouTube, Amazon, or Twitter. So a very good average. This year, as I said, we kept these 1 million daily users. We closed more than 20 partnerships. We integrated 30 and more than 30 new blockchains. This year, where we have the year of the L2s, new chains. Everybody is launching their own chain. I don't know why, but it's supposed that is something good. I have to say also that most part of the trading activity is still on the top 5 ones that are Solana, Ethereum, Tron, Polygon, and Base. We have 5 new tools, including top traders, liquidity lockers, user area to check your holdings, and many of them. And we experienced more than 70% growth at our social media, including a lot of followers at X. So it's crazy. So what's next, in which we are focusing now? We have new tools, new things in which we are focusing, in which the market is asking for. And we take a lot of into account the user feedback, the market, and what things are the people demanding or what platforms are having more success this year. And so we are partnering, we are building, we are doing more things to engage the platform and to have, as I said previously, all the information and all the tools you need in the same place. Not working. Okay. The first of them is the Raid Dextools bot. It's a bot in which, it's a Telegram bot, in which you can set up your community for the token creators, and automatically it helps you to boost your community engagement. It helps you to get visits, to get comments, to get shares, especially in X, in Twitter, and it helps also to keep boosting your Telegram community through referrals, through fees for the most active users. It's something that we are integrating into Dextools, and we are going to share all the documentation very, very soon, but it's already working and it's already being used. So it's very interesting, especially for the users that create tokens and want to boost their community. This year, we also experimented the final explosion of the trading bots. I'm sure most of you know Banana, know Maestro, know Unibot, and others. And I think this is a big trend in terms of the future DeFi trading. Something that we always lacked in DeFi trading were limit orders. We have some prototypes, 1inch, Kyber, and others did very good products in terms of limit orders, but the trading bots were the real feature that democratized the trading bots for everybody. We started with Telegram bots in which you can buy and sell directly with their system from the pools. And for me, the next step is we just partnered with Banana Gum to integrate their trading bot directly on Dextools. So you don't need to be at Telegram and using their bot. You can do it directly from the Dextools interface, buy, sell, limit orders, snipe, and many more features directly from the Dextools interface without leaving the chart and watching the rest of the information at the same time. So you don't need to stopping to say the information while you're trading. So I think it's going to be a huge thing. Next, DX Fan. I'm sure also that most of the DJs here, they know about PanFan. PanFan is like a bonding launcher in which you can create tokens for less than $1, start buying and selling the people, and at the moment they reach a certain amount of liquidity, they are automatically listed at decentralized exchanges, in this case Solana. So as most of the launchers were at Solana at this moment, we decided to partner with the DXSale and create the DXFan. That is the same as PanFan, but for EVM chains, Ethereum, Polygon, Solana, BNB, and others. So you can create a token, $1 for free, basically, let the people buy, and if you achieve to create the pool after the bonding curve is finished, you receive fees, you receive also referrals. So it's going to be, I think, a huge step. Yeah. Okay. This is DEX Drops. DEX Drops is, I think, one of the surprises that we are going to share here today. DEX Drops is a tool we have been created last month in collaboration with friends. That is the tool that allows you to create airdrops for your token directly at Dextools, and it lets the users at Dextools to claim these airdrops. What means you as a team can create an airdrop directly at Dextools, so you get a huge boost community engagement. You are highlighted in the platform, and the users can go and do the tasks you are going to send to them, and after the process, they are able to claim these tokens. We have millions of tokens, as we said, so we expect a lot of activity here in terms of creating airdrops, claiming, and of course, for these people that is interested in earning funds, very, very easy and almost with no effort. Is a huge, huge tool, because we put all the different airdrops that are in the market, we can do it now all together, and it's a very good step. So yeah, I'm going to talk a bit about our token. I just have 1 minute left. So DEX token is the token for Dextools. You can buy and hold just to use all the features of the app without advertisement, watch upcoming trending tokens, get access to the DEX Force, that is our premium group, have more tools, more engagement, and more of everything inside of Dextools. And the important part, as I said, is you just need to hold. You are not paying. So it's like having a share. At the moment you want to sell, you are free to sell and go. So I think it's a very good model for the community and also for us. And I'm also going to talk about the token model of Dextools. We are very deflationary. We have a very huge burning system in which from every fee we take from the aggregator and from other income sources we have, we are burning a lot of Dextools. So last year we burned around 8% of the supply only in 1 year. And this year, during this event, we are going to burn more than 10% of our total supply, more than 7 million Dextools that we have ready to burn. So what makes this guarantee also, and even despite of the bear market, it guarantees a full price. It's like, we grow this year, we grew to a team of more than 30 team members. I will say that we are more close to 40. Some of them are around here, so I appreciate a lot the effort you are putting all day to make this thing, this company, this product for all the world possible. And thank you very much. It's like I have to say thank you. All the social media is available for you to check. We have Twitter, we have X, we have TikTok, we have a YouTube channel with a lot of tutorials to learn about Dextools, about the trading in DeFi and the different tools, the Dextools Academy. So yeah, you can check there everything we have in case you are new to Dextools and you are a bit overwhelmed by the amount of information. So you can start step by step and do it. And by last, if you drink, don't trade. This is a festival. I'm sure most of you are going here for the drinks. So you know that drinking and trading is about the risk management, and drink can affect these things. So please, take your time to trade and take your time to drink, but don't do it at the same time. Thank you very much. Enjoy.
Good evening, everybody. Hopefully Barcelona is treating you guys amazing. We have our lovely panelists joining us on the stage right now. Awesome. Great to have everybody here. So today, we're going to be discussing crypto trading strategies for volatile markets. I am the host, and I have the lovely panelists that are going to be joining me. Volatility is not new to crypto, as you guys know, and it is a double-edged sword. It could be blissful, or it could be a nightmare for traders. And I have these experts with us that are going to dive into crypto trading strategies in these volatile markets. So let's introduce them. Without further ado, we'll start from left all the way to the right, and then we'll get started.
Hello, everyone. Nice to meet you. This is my second time at DEXT Force Festival. Very excited to be here. So a little bit about my background. I founded my first stock automation company when I was 16, exited the company at 21. Later on, I worked for Morgan Stanley and managed $50 million fund, systematic trading long and short, as well as a directional trading fund. And then I founded my own crypto trading platform, completely regulated trading platform for crypto quantitative strategies. We use the AI since 2017, and it's been going on very successfully.
Thank you.
Hello, everyone. Pleasure to be here. I'm Paul, and for 7 years, I'm involved in the crypto market, and for about 6 years, I'm leading the development of DeFi projects and overall Web3 projects as well. Currently, I'm working on the application that is basically executing the automated strategies. So it's highly tied to crypto trading strategies we will discuss in today. Thank you.
Lovely.
Hello, hello. My name is Antoine. I'm the CEO at the UNCX Network. So we're a B2B DeFi services provider working with Dextools since pretty much day one. So this is like 4 years ago that we started our journey. So it's more or less like 4 decades in crypto, if you think about it. And thanks to the nature of our services, we're obviously very close to the markets and to the trading activities, even though it's not the main activity for us. And we currently are responsible for $400 million of TVL. And yeah, very happy to be here. And I'm just gonna take the opportunity to thank Dextools so much for having us represented today here. Thank you.
Thank you.
Nice. Hello, everyone. Thanks to be here. Thanks for DEXT to put it together. My name is Pedro. I'm originally from Venezuela, econ background, finance and corporate. Recently, I just got out. I was CFO of Bricken, tokenization platform. We did launch, I don't know, 300X or something. So yeah, try to share some of the knowledge of running a crypto treasury within this volatile sector that we run into.
Awesome. Let's dive right into this. So before we could jump into crypto trading strategies, and I know that's why all of you guys are here, let's first understand volatility. And volatility, as I mentioned in crypto, you see assets with sharp price decreases or increases, and that could make you or it could break you. So understanding volatility, I have a question, and I'm curious, people ask all the time, why are prices going up? Why are prices going down? And people don't really understand the cause of it. What is the primary reason that you think crypto prices go up or down? Anybody could take a jab at this.
Well, if I may, for the markets that we are very present on, which is more like the low cap markets, I'd say one of the reasons for the volatility that we observe today and for the last 7 years is mostly related to the size of the liquidity versus the size of the market cap. And as people trade, sometimes it's even an indicator, especially on trading for centralized exchanges where you don't clearly see what's the liquidity and what's the depth of the liquidity. The simple answer for volatility is that if the liquidity is thin, the volatility is likely to be more extreme. Of course, we could go down the rabbit hole for pretty much the whole panel,
of
but
course.
that's
let's say, more so on the technical side. But what
Sure.
about things like macro events, interest rates, inflation, political, like geopolitical events, anything like that that might swing crypto to the extremes? Does anybody want to touch on that for a minute?
Well, that's very now on the papers, let's call it. There's always a relationship between financial markets and crypto markets. Crypto, because of decentralized nature, obviously tend to be more volatile. So I think that's the main reason, having access directly and getting out directly. The second one will be regulatory system. So laws are getting used to what we do. So while that process regulates and normalizes, then obviously volatility is going to be present. So you had to watch out for that. And then asymmetry of information. That's the same thing that it complements the liquidity, what he was saying. So access to information, the better you do your due diligence, the better you know what's going on, and the volatility. With the volatility comes with knowledge. So the more they know, the...
Thank you. And now that we understand volatility a little bit better, let's dive into portfolio building strategies. And I know this is crypto trading strategies, but it's very important that you have a portfolio, a base portfolio strategy. And I want to check up on any of our extremely bright panelists on how would you start with building a portfolio. Is diversification important? What would a rock-hard portfolio look like in a market with this much volatility?
I think it's very important to understand crypto markets to begin with, because crypto markets are basically driven by sentiments, and there are a lot of narratives which keeps changing. In 2017 to 2020, there was a DeFi narrative. Afterwards, for 1 year, we had NFT and metaverse narrative. And today, those tokens are nowhere. No one is even interested in them. So I think if you want to build a good portfolio, you have to go with the narrative. Many of those companies don't even exist. They don't have revenues. They don't have a proper team. Just they're coming out from nowhere, and just from the sleep someday, they think they can start a token and they raise a token. So, but still, if you want to make money, that is the objective of building a portfolio, right? So you have to go with the narrative. So the current narrative is like deepen, RWA, AI, all the money is going into these projects. So we have to always see what is the current narrative, and among those narratives, which is the kind where we can have huge potential, but at the same time, lower downside risk. And there are like several ways to assess that, like how to build that one. We have to see who is backing them. What is the background of the people who are doing it, whether they had any previous experience doing the same thing, whether they come from a very good education background. After doing all this kind of due diligence, we can get more or less the idea, yeah, maybe they will be able to pull it off. So in my opinion, this is how we do it, that we select a portfolio based on the current market narratives. And when the narrative is dying down, we try to shift into something else, like which is having a better narrative. But there are some things like which can always be good. Like, for example, some of the layer ones, more number of adoptability, more number of users, more number of apps being built on it. they will always have some intrinsic value because of that. So they can be kind of like a long-term portfolio, but when it comes to short-term portfolios, we should always go with narrative.
I agree with you, and we're going to dive deeper into, I guess, narrative trading and how to spot these narratives and trends and take advantage of that. I will add as well, I think it's important to be rebalancing as often as possible when you do have profits. So like having that base portfolio, whether it's like stacking sats in Bitcoin or ETH or your favorite L1, and just to keep rebalancing and locking in those profits, that's worked best for me. So I do understand the narrative trading, but what if it was somebody looking for a long-term portfolio that doesn't have the time to look for these narratives, that doesn't have the time to be in the trenches and these Telegram, Discord chats? How would they weather this extremely volatile market? What advice would you give to somebody, I guess, who just wants to buy and hold?
Yes, and honestly, if we're speaking about the highly volatile markets, definitely narrative trading is something that we should use because it indicates the liquidity inflows. But when it comes to long-term investments and basically to different types of users that we have on the market, we should take into the account the risk profile of each user. We all have different psychological level of investments. And this is basically where we should draw the line. If you follow a narrative, it's good, but we may end up just gambling because we switch in one narrative to another, trying to basically hop on the top, extract profit, but we all know that there are a lot of more experienced guys on the market that actually will drop their assets on you. That's why it's definitely better to stick to long-term portfolio for not saying average user, but for most of the people, it's definitely better to build long-term portfolio, which includes more stable assets rather than switching to narratives that just appearing on the market. It can be a tiny amount, let's say above 10%, and that's it. Yeah.
Amazing. So now you guys understand a little bit of building a portfolio, the importance of building a portfolio that could, like I mentioned, weather the storm of this volatile market that we're in, that we're lucky to be in. And let's dive into the core of the discussion, which is crypto trading strategies. And no fluff, let's just jump into it. What are the best strategies that work for you guys? Is it day trading, building your own strategies, bots? What works for you guys? What are you guys doing right now that is making you money?
Honestly, I will jump in.
Yeah.
You're excited.
When it comes to trading strategies, I don't want to recommend something, but this is a good advice. If someone advises you to do something in crypto, that's most likely a scam. And if someone tells you it's 100% will work, it's also a scam. So day trading is something that definitely should be used by the very experienced traders, and this is not something I would advise for the user that come into market from time to time, just rebalancing his portfolio. For long-term opportunities, using the appropriate narratives, manually executing your strategy is good, as well as we have currently on the market different decentralized applications. One of these applications I'm currently involved in. We're building automated trading strategies for the users who actually don't know nothing about crypto and about the execution of these strategies. So let's say if you can spend 24 hours in the market, you definitely can better manage your portfolio and not giving your money to any third party. That's definitely a case. But if you would like to have your, let's say, yield above average, you may use different solutions. The most obvious one is Yearn Finance, but we are not limited to it because there are cross-chain solutions that currently appear in that allows you to increase your APY, increase your capital efficiency. So that's highly tied to the amount of time that you spend in on the market, as well as on the your psychological level as an investor.
Awesome. Does anybody else want to jump in with their profitable trading strategy?
I can add something there, for sure. So we follow a principle which was given by Marcos Lopez de Prado. He is a Spanish quantitative finance professor, very well known around the world. He stays in Dubai now. So I had an opportunity to meet him a couple of years ago, and that's how my company was born. The major problems that we are facing in trading, for example, is that the same type of trend doesn't exist every day. Every day, sometimes markets are mean reverting, sometimes it's trend following, sometimes it's range bound, sometimes it's swing. So it's very difficult to come out with an algorithm that works all the time. There is no such thing as like one algorithm, you just make it and you leave it and it works all the time generating revenues to you. It's just simply a Madoff scheme if someone tells you that. And that cannot be true. And the Marcos Lopez de Prado wrote a book on that one, Finance in Machine Learning. So this is the kind of approach that we followed. What we have to do is like we need to have different variations of strategies. Something for mean reversion, something for trend following, something for swing markets, something for scalps, so many different types of strategies. And we feed all these things to AI, and AI will predict based on the past 30 days, 45 days current market trends, like which is a strategy having the highest probability of winning for the current market trend. So, and in this one also, Marcos Lopez de Prado calls something as quantum mental approach. Quantum mental approach is when like your quant models are telling you something, but you are a human, you can have your thought and you can decide on that, whether that's a good thing or not. Because even though sentiment analysis has gone way ahead than where it used to be like 6 years, 7 years ago, when we built the engine ourselves completely in-house, we felt this challenge that some of the times like if there is FOMC meet or something else is happening. For example, there was the war which is going on currently between Iran and Israel. On that day, the Bitcoin suddenly dropped. And this was a kind of like live news, and we didn't know it. So nobody knows it. So the quant models don't know it. So sentiment models know it only after it comes, not before it comes. So at that point in time, like you need to adjust your algorithms instantly in real time so that like it gets adjusted to the current market condition. So this approach is what Marcos calls it as a quantum mental approach. So if we have all these things in place, then I think like trading will be much more easier, and we have at least 70 to 75% chances of winning the trades. So the secret is in having different things and selecting among that.
Awesome. I mean, I love everything you said. I think you're my new quant. Anything from this side?
Yeah. Do you want to go?
Go.
So first, maybe I could say that as an individual and as a company, we obviously have different strategies. So this is one of the first things that we recommend, that I would recommend, is to pick a side. Your risk profile is very important. And back to the question that you had before, or the thematic about like diversification. I think what's important, of course, you have to follow different narratives, adapt your strategy real time, or shorter time frames, let's say. But to me, it's key to understand and pick one side of the market. You have real-world assets, you have DeFi protocols, you have NFTs, you have fungible and non-fungible tokens at the same time, ERC-404s. You have like different narratives, and before thinking of diversifying into 2 different or 3 different narratives, you should study one of them, pick your horse in a way. And even though the horse is not hot for a couple of years, there is this seasonality in crypto that happens a lot. Personally, I'm, it's also what we sell as services, right? We're into DeFi, so we're obviously, and I'm obviously personally very DeFi oriented in terms of positions, investments, and so on. And so when it comes to the strategy to execute in the DeFi markets, let's say, I would recommend to focus on companies that have been around for a certain time, not what they want you to buy, not the fresh stuff, but the stuff that is proven to be resilient. Leaving a bear market, still being around as a DeFi protocol, is not given to all the companies out there. And then here's the shield: use DeFi Llama, and use the protocols that generate revenue. I believe there is a recent example that can illustrate my point, is Uniswap. So Uniswap token, everyone knows it, the airdrop tokens in 2020 or 2021, around that time. The point is, when Uniswap, for example, activated or had debates about activating the fee protocol sharing, the market moved instantly, for example. My point being, with a company that makes revenue, you have more naturally a certain upside. And you can check this data for those who at least generate turnover on chain. So I recommend, like the data is here. It's not widely used yet. Yet it's starting to be used. I think if people here follow DeFi, you can see Aave is doing extremely well. But I'm not going to go into specific tokens, obviously. But yeah, study one side of the market and apply some of the criteria to evaluate, especially for a long-term portfolio. Seasoned companies, seasoned protocols is my answer.
Thank you. And I'm not sure if you wanted to add something.
Yeah, well, elaborating on that is, I think the opportunity that crypto and DeFi gives you is to have access to data. So I think I have 2 rules specifically. One of them is, you asked about day trading or whatever. I always put together the shorter the time you want to trade, the more sophisticated you have to be. So don't use manual to do day trading. If you want to do day trading, then you have to use quant, because this is an open market driven by data. So you're disadvantaged if you're not using it. The longer period you're going to hold it, then maybe you can do your functional analysis and all that. That's the first premise regarding technology. And then the second will be, the more data available and the more data verifiable, the better. Do not, I try to advise, do not gamble. But that's the main reason why blockchain and DeFi exist, because we have the data. So why keep doing it like you used to do it through your bank instead of getting information about it? So.
Thank you. And diving more into crypto strategies, you guys have mentioned this a few times now, and that's that crypto really thrives off powerful narratives, whether it's like AI, meme coins, RWA. And one of my mentors really shoved this down my head, and he didn't create this saying, obviously. Do you want to be right, or do you want to make money? And it's like, I know that these cat coins and meme coins, it's not the future, but that's where the volatility is, and that's where a ton of to be clear, money could be made, and you're going to be either at the top of those, at the front of those trends, or you're going to be FOMOing a bit late. And you don't want to be the last person to these parties with these trends and pretty much hold the bag. So I want to ask you guys, how do you figure out what trends are hot in crypto? Like, how are you at the front of these trends? And then how do you take advantage of the volatility?
Well, you check Dextools.
That's a good
answer.
Native integration. Yeah. Coming back to narratives. And here we should probably divide the potential good for the world and basically how we should provide something very unique and useful to the market from the incentivization of users. So basically this is how meme coins and all other narratives are working. Because it's just the indicator of where the users are aiming at, where the liquidity inflow in the current amount of time. And this is why a huge exposure in new narratives is bad. And maybe I would like also to question the approach that actually was proposed by Antonio, because if you put your money in just one side of the market, you increase your exposure a lot, which may lead you to the impermanent loss. Not good. So in my opinion, definitely we should put our time, our vision into the narratives and extract value from it, but not rely fully. So it's great when you have a tiny amount of your portfolio, when you're playing with new narratives, but actually you have a good base of the structured assets that for a long amount of time in the market.
Of course, and that's why I mentioned at the start, rebalancing. After you make a great trade in a meme coin and you could lock in profits, stack sats, buy Bitcoin or buy something that historically has risen over the last few years and hopefully will continue to do so. So you're compounding those gains and you're not just giving it away back to markets. I'm going to add a quick nugget for you guys on how I kind of get ahead of narratives aside from using Dextools and other platforms like that. But what I really found is get yourself some communities. You pay to play, to be honest. I have got into this NFT community, which is a premium, but these guys are at the forefront of on-chain trading. These guys are trading every single day. So get yourself in a community that are sharing wins, are at the front of the market, are pretty much looking for new narratives, new coins, and bring value to them as well, and they'll bring value back to you. So that's kind of how I stay ahead of the crypto narratives. I can't do it myself. There's a new narrative, new coin. It just moves so quick. You need a team or a community, so find a tribe. And let's move on to risk management, because anybody in this room can, buy a coin and see thousands of percentages, of gains, but making money is one thing. You have to learn how to keep it. So how do you guys mitigate loss or just remove risk from this uncertain market if it moves against you? What are you guys doing to protect your gains or your portfolio?
Would you like to start, or I can dive in? Good. So risk management is one of the topics that is not really presented on the market, in my opinion, and on different speeches. So for the, let's say, average portfolio, which has a mid-exposure, mid-risk, and if you just a spot user that from time to time buying crypto from the market, also investigating different narratives, you can use simple options for hedging your portfolio. This is something that can be studied quite easy, and this is basically the very first advice. So you just pay in premium if you see the quite tight situation on the market. Probably something will happen, and you're not feeling really safe.
So when you say hedging, like we see that in TradFi, traditional markets, are you talking about like options, futures? How would you do it specifically?
Yeah. So basically, there are several types of options, put and call, and depending on the market conditions, if you feel that your spot portfolio may fail, you just buy in the option, pay in a little premium, or not really a little, depends on your position, but it's also a separate topic. But there is something also worth to mention, that in case you use options to hedge your portfolio and you have a lot of assets that are not really presented on the market, so let's say you super high risk trader, it may be hard to find someone who will sell you options. So that works for quite huge assets that well presented on the market and which can be at least partially predictable. So if you buy a new meme coin that actually presented on Dextools for about an hour, sorry, it may not happen.
Thank you. Is there anybody else who wants to add on mitigating losses or?
Yeah, sure. I mean, starting from getting your risk straight, what I usually do in my practice is I always take my gains. I don't invest my gains after I repeat the process after I get the gains. I don't leave it in the position. That's practical advice. Talking about hedging, you have correlations between assets. So when the spreads get high, you can buy a long position and then just hedge with another one that has correlation on the opposite side. That will help you out to kind of balance risk on managing that. And the other one is the whole DeFi system and ecosystem has evolved so much. So now you have different nature of assets. I would really encourage you to look into those because, I mean, if you do long positions in specific tokens, you can do liquidity provision that you can get all the data, and that will give you, so I usually position gains on either liquidity provision on specific, it's called price ranges, or you can do real world asset. You now can buy a TBO on crypto, which is something that, a couple years ago you weren't able to. So if you want to bring on more capital, maybe you want to start touching some regulated asset like ETFs or something. The other one is easier for you to structure, let's call it a corporate structure that will allow you to do it. So yeah, I really encourage you to see the full picture, to analyze everything, to really be able to diversify and don't just stick with that token that give you the gains. Just move on because there's always new things coming up.
And if I may add here, because we're talking about risk mitigation, but let's also address the loss mitigation or reduction of losses. I think it's important, unless everyone is the best trader ever here, which I hope, right? But you also have to realize that you need to let the market humble you sometimes. We are not, whether it's like short, long, midterm, you have to also acknowledge that every trade can also go, they can go both ways. And I think, integrating this, that, you have to at some point, cut the losses. Whether it depends on, whether it's spot, futures, options, you have to sometimes, pull the trigger on yourself. And maybe if I have like 20 seconds, I have a funny thing that we noticed on chain, because as we're on chain provider, providing vesting services. So originally this is not for this purpose, but what we see sometimes is people that refuse to let their emotions take over. And so what they do is they're actually locking their own positions. Like say, for example, you buy ABC on chain, and to avoid any form of emotion, whether it goes upside or downside, people actually lock against themselves the supply. No one is asking them to do so. They're just doing so that there is no emotions when it comes to their trading strategy, which I kind of find funny. Yeah.
Thank you. I mean, these guys are degens. Nobody mentioned a stop loss, but I definitely would recommend using a stop loss. We've been all there, right? Also, with risk management, hold your own keys, guys. Don't get comfortable like filling up an exchange or a leveraged, position. People get comfortable and then they end up getting wiped. And most of the times they don't realize what happened till it's too late. That's pretty much it. We shared a bunch of great insights from these experts here. We're wrapping up. If you guys have any questions, feel free to catch any of the awesome panelists and ask away. And enjoy the rest of Barcelona. Thank you guys for coming, and we'll see you guys soon.
Thank you.
Hello everyone, so I'm back on stage to speak about the predictions and insights for 2025. So 2024 is already finished. We expected many things. I don't know if all your expectations came true, but in 2025, I'm expecting few things to happen, so that's what I would like to present to you. So in 2025, we will see the market cap growing very steadily. Of course, it depends on a lot of factors, like the US elections, which everyone is looking on. Because Trump has launched his own DeFi project, which shows like he's really invested in crypto. So if that is happening, then a lot of crypto companies might move to United States, which is the hub of all the financial things. So we can see a very good growth in the crypto sector. And next one is the AI trading strategies, like how AI is coming up, especially after the ChatGPT. A lot of innovations have started to happen in the AI space. We have like a lot of other kind of analytical tools, like Arkham has built a lot of intelligent tools. There are like sentiment tools, there are like blockchain data, there are so many data which is available in the real time, which was not possible in the past. So a lot of AI is happening now, and a lot of AI trading system is in place, especially as the institutions keep coming. They would like to use more of traditional finance grade tools to crypto. And the impact of tokenization and DeFi growth. Next year will be the year of DeFi. So we have already seen that DeFi is growing very steadily, partly also because of the MiCA regulations, which is coming in Europe now. So MiCA regulations is making it very hard for the crypto companies, especially if they are smaller companies, to get registered as a MiCA and to do business. This is very friendly to all the big companies. So a lot of people are now going on-chain. So they're not trading so much on centralized exchanges. For example, if you have seen yesterday's report, that on Binance, the trading activity among the centralized exchanges have fallen to all-time low. So people are going more on-chain now, and people are just leaving the centralized exchanges because of so much of confusions surrounding the regulations and stuff like that. So this is what I was exactly talking about. The one thing is about the MiCA regulations, which is very confined to European Union. So there are WARA regulations, which is confined to United Arab Emirates, especially Dubai. There are like many other uncertainties coming from United States. And the major problem is like every single regulator has their own definition of cryptos and how they classify something as utility, something as security. So we don't know how these different regulatory bodies will be able to communicate and come to a consensus. So this is one of the biggest hurdle, and we have to see like next year how this is going to be sorted out. Because if everyone have their own definition and their own theories, I think like a token can be security in one jurisdiction, but it can be utility in another jurisdiction. This is the reason like why when you raise a token sale, you will be restricting your investors going to United States, Canada, or China, or something like that, because they all have their own definition. So we have to see how this is going to come up. And I think almost all the crypto things in the future will go under the radar of AML and KYC policies. So everyone have to go through mandatory KYCs to let people know or their organizations know who they are. I don't know if it's the right thing or wrong thing. It's a double-edged sword. It's completely another discussion, but this is what is going to happen next year, and this is what we'll be seeing it. So the major predictions for markets for next year would be, I'm expecting the total market capitalization to double to $5 trillion. So this is my very modest prediction for the next year. I think like because of the adoption and a lot of people going in for Bitcoins, especially from the institution side, there's a lot of demand, and even many of the governments are loosening up a little bit to encourage people to go into digital finance for one or the other reason. And if you're seeing the growth of stable coins such as USDT, USDC, they're going up very big. USDT is making almost like $400 to $500 million of quarterly profits, which means a lot of people are really using stable coins. And stable coins is used like in so many other areas within the crypto space. And with the entry of PayPal's stablecoin, which is PUSD, I think it is going to go more mainstream going forward. And the major sectors which will be in focus for next year would be AI, RWA, which is real world assets, and layer 1 and layer 2s. I know, and we all can agree that there are more number of layer 1 and layer 2 than the number of crypto people in the entire space. Because every day you will see a new layer 1, layer 2s coming up. Every day something is mushrooming. But still, there are some chains like which is very interesting. For example, if you have heard about Bera chain, which is proof of liquidity consensus, very interesting one. If you have heard about Monad, they're doing very good, and they're doing something very special, which has not happened so far. And if you know about the project by name Movement, which is using the Move language for the blockchain, which is EVM compatible, which makes it more faster, as fast as Solana, or probably a little bit more. And these kind of blockchains will really have use case when we speak about institutional adoption and having high-frequency trading systems on chain. So these are some of the sectors that I think will be very bullish going forward, especially gaming, because games brings a lot of people on chain, because everybody plays games. Games have been existing since many, many, many years. Many of the Web 2 gaming studios are incubating Web 3 gaming now. The quality of the games on Web 3 has not been so great so far. And also the interesting games are still not there on Web 3 space. So this is something like which major studios are working on currently. And I think next year, who knows, maybe we will have some very good games. And there will be good incentives for people to engage with their games and play these games, and which will bring in a lot of people into this space. And also, like if you're watching DYDX and GMX and these kind of perpetual trading exchanges, like we are also building, that's what we call as B3X. Why this is gaining momentum is because of several factors. That before on-chain trading used to be very slow, especially if you're speaking about perpetual trades or options trading or something like that. But now people are building their own chains. For example, Hyperliquid. Anyone have heard about Hyperliquid here? Which is one of the fastest, like on-chain perpetual trading DEX. They built their own blockchain. So they build their own blockchain, but they don't give complete visibility and transparency of their chain, but they build it very nicely. And if you trade on that, you will not find any difference between any centralized exchanges or decentralized exchanges. So I think like somewhere this discord, like which was there between centralized exchange and decentralized exchange, is slowly closing in. And sooner or later, like we will have the same kind of user experience and same kind of speed what we can expect with centralized exchanges. And one of the major problems that we had in this centralized exchange and decentralized exchange debate was to sign up on a centralized exchange, all you need is just your email account, or just you need your Facebook account or a Twitter account. But when we speak about decentralized exchanges, you needed your wallet to connect to the exchange, you have to deposit, and there was a lot of problems with that one, because it's not a very good user experience. But thanks to account abstraction, which has come now, and you can use your Facebook account, Twitter account, Gmail account, anything, and you will be able to log into your perp trading DEX, wherein your Web2 application will be having your wallet address, which is directly linked to your Web3 application. And you will be able to deposit, withdraw, and do anything as you were doing on a centralized exchange very easily. So this is how it is getting simplified. And a lot of trading volumes have been generated on decentralized exchanges now. And centralized exchanges is clearly going down because of regulatory reasons and a lot of reasons, especially after the scams of FTX that we saw, eroded the value of billions of dollars for people. So that's why I'm very bullish going forward for DeFi system, especially with the derivatives trading space. So the major conclusion is that AI, DeFi, real-world assets, and gaming, this tokenization is going to be the future. They're having the real use cases there, and things have started to gain a lot of traction. Because one of the panelists before, when I was here, he was mentioning about DeFi Llama. So if you see DeFi Llama, you will be clearly seeing how much revenue someone is making. And there are a lot of like on-chain applications like that. Like for example, Nansen. You can see how many people are really communicating with your dApp on a daily basis, how many people are really paying users, or like just communicating with that using your chain. So we are seeing like really growth in the chain on year-on-year basis, like when we are seeing compared to 2002, 2023, and 2024 now. And I think this trend is going to continue going forward. And you have to adapt to the new technology, because crypto is a very crazy world, if you think in one way. Because a lot of people try to come out with an app, and they try to deploy the apps on several different blockchains later on. That is because you need engagement from different communities, different blockchains. That's how you will grow your community members, and you spread your business to get new users onto your platform. So I think this trend is going to increase going forward. A lot of different projects will be on almost, like the major chains going forward, but which will have the major speed and which will have the lowest transaction cost. They will have the edge. And we at B3X, like we are building the fastest perpetual trading DEX. Because like we have a company which is a regulated crypto quantitative trading. So we have been very successful there. So what we are planning to do is something very innovative. We take the liquidity and we trade with that liquidity with the over-collateralized way. So people get the APRs in terms of profits that we generate, and we get liquidity for the trading exchange. So pretty much like what Hyperliquid is doing. So this trend is going to continue going forward. So myself, as I introduced myself before, I am a startup founder. I came to stock markets when I was 16. I built my company successfully into stock market automation using SMS services. I sold this company very successfully at the age of 21. I went on to work for Morgan Stanley and managed $50 million of fund. And then one day, like, I quit my job, and I was thinking what I have to do next. So 2014 was the year when I came to Bitcoin. So that's the time, like, when I started to invest a little bit, trade a little bit. And in the year 2017, like, we founded bcube.ai, which is a regulated quantitative trading platform only for cryptos. So once we got this going, we have an amazing track record for 6 years, completely non-custodial. We don't take any of your money. All the money remains in your own account. We just have the permission to manage your assets. So in this way, in the past 3 years, we have beaten the Bitcoin returns. So this is what we have been doing. That's my background. So me and my company has been on the Forbes list We're one of the most successful companies in the Eastern Europe, in the crypto space, and in the AI space after filing several patents in AI trading systems. We have been on panels of several things, and this is one of the Dextools panel, like where I was last year. So I just wanted to put it here so that some people can refresh their memories. Yeah, this is my contact. If you would like to contact me or write to me or speak to me about anything about trading, AI, quantitative finance, math, anything, be free to do it. You can follow me on Twitter, LinkedIn, anything that you wish. Oops. OK, the future of trading belongs to those who adapt. We always say this because crypto is always about adapting, and the technology is always about adapting to something new. So if we don't adapt, then we are not going to survive. So we have to go with the narratives when it comes to trading, like short-term trading. We have to go with the fundamentals when it comes to long-term investing. We have to go with a lot of math, a lot of science, and a lot of intuition of our own when it comes to trading. So that's why we need to constantly adapt to whatever the situation is. I'm sorry, there is a glitch. Technology is not working. Anyway, thank you so much, and happy being here, and thanks DEXT Force for this opportunity. Thank you so much.
Hello, everyone. Please. I'm stoked to be here. Barcelona is my favorite event, so I'm really happy to be with you and also this lovely panel. We'll have a good discussion about Web3 finance. And I think this is the strongest panel I ever had, actually, with specialists in finance. So let's kick off with an introduction first, so we know who we are talking to. Ladies first.
Merci. My name is Maria Spartalis. I am 25 years plus a specialist in private banking, having booked over €1 billion of private banking assets of international clients. I was director of Credit Suisse and other different strategic banks in Switzerland and Austria. I've been a director of first crypto bank, Switzerland Falcon, which belonged to Mubadala, Abu Dhabi group. We have here our friends, partners from Middle East. Right now, I'm a partner. I'm a founder of Spartalis Capital. It's my own company, doing financial consulting for the clients, business consulting, and logistics services all around the globe.
Thank you. And you, sir?
Hi, my name is Carlos Salinas. I'm the head of digital assets for Morabank. Pretty similar to my colleague here. I've been working in the industry for the last 25 years. We do private banking only, and I've developed all the, let's say, all the offering around digital assets for my bank. We are the first custodian in Andorra. We offer also direct investments. We do off-ramping for private clients, and lots of all the different products, like structured products based on crypto assets.
Thank you. So we have a strong, my right side on banking for sure. And let's go to the left, please.
Hello, guys. I'm Key. I'm Karnika Yashwant. People usually know me as Mr. Key. I'm from Dubai, and I think I'm very different from the others on the panel. I'm crypto native, been 11 years in the world of crypto since 2013. So starting off from the very early days when you had Bitcoin shitcoins to all the ICO era and everything that came thereafter, I've been in that whole trajectory. I run a fund in Dubai, venture capital, along with an accelerator called Key Difference, and we have been supporting Web3 companies for a very long time. Since 2017, we have raised about $550 million for various Web3 companies. And some of our amazing portfolio companies that we have been invested part of in the secondary markets include Animoca, Ton, and many others. So super excited to be here discussing on this amazing topic. And there you go.
Thank you. Yes, please.
Yeah. Hello, guys. Or I say in the first word I learned in Spain, hola, Barcelona. My name is Alwin. I come from Malaysia, and I have my own financial institutions in Asia. And we also have our VC. We work with SoftBank and Google. And our group also have a very big VC capital in California. And then recently, we just funding Solana, which is we launched last week in Singapore with the Formula One's event. So, yeah, I'm really happy to be in this favorite city and amazing people here.
Thank you.
Gracias.
Thank you. So we now have a crypto strong side and then the TradFi banking side, and let's see what we can make up of this. Usually I begin my panels with a quote from Socrates, which is, the beginning wisdom is the definition of terms, because otherwise how can you talk about things if you don't agree on what we're talking about? So let's define Web3 finance first, as you see it. And I would like to start with Mr. Key, because you actually have a quote that struck me, which is, blockchain is not just a technology, it's, you want to fill up the rest?
Philosophy.
Yes, so please start with what actually defining Web3 finance is for you.
To me, Web3's philosophy is choice and freedom. Everything boils down to these two things. Otherwise, there's no point of us being in this Web3 world. It started with Bitcoin with a vision of how do we bring freedom to the people. They can own the assets and they can hold the assets with themselves. To me, Web3 finance is not just what we see in DeFi. It's not just the crypto tokens out there. It is embodying the fact that any asset in the world, whether it's a real world asset represented as a token, a fund represented as a token, or any form of assets online, if they can be in the Web3 way, in a way that you could hold it yourself, you don't have to be accountable to everybody out there, you don't have to ask permission to spend your money, you have it, you own it, you carry with you, and you work with it. You could increase it with your trades, with your savings, with your investments. Whatever happens, happens with you as the center of attention. It starts from you, ends with you, with your choice. And I think that is the foundation of what a Web3 finance could mean from a philosophical standpoint. But coming to the technology, I believe it is disrupting what the status quo in the space right now is. You could not only have the assets that are making money for you, but those assets can also be collateralized, which is not possible with a lot of assets in the space at this point in time out of Web3 in a traditional environment with a banking sphere. You have loads of questions and concerns with it. There's no way you can work in a permissionless, trustless manner that is also transparent. It's not like you get a lot of free money from DeFi. It's in fact over-collateralized. It's more safer. A bank can go down, but a Web3 protocol cannot go down in the way it's structured right now. So it is founded on the principles of safety, and at the same time, it has all the robust features that make it fast, efficient, cheaper in terms of transaction fees and everything else. So to me, Web3 finance is everything that one would want with your money in tip of their hands, 24/7, and that's powerful.
That is very powerful, and we come from the same place. I was also looking for freedom, and that brought me to blockchain and all the other stuff. So I feel you. We're brothers here. So please, Alvin, tell me about your perspective on Web3 finance or Web3.
Money, we try to do business, we try to send people money with the technology of Web 1 or Web 2. It's really take long time. Probably we take like sending a transactions to another country. With the older technology, we might take like 1 or 2 days. But with the Web3, we can do it instantly. For example, with our these 2 years, the crypto asset is being defined that one of the very important asset that finance institutions should be more looking for it. But without the Web3, we couldn't grow crypto asset, this category, easily. With the Web3 technology, we can easily implement the current financial asset or financial technology. For example, blockchain is a languages. How do we connect blockchains with our current database? Because the cloud server is running by Java, is run by other languages. And then, as we know, blockchains is running by Rust languages, Solidity, and some other change languages. So Web3 for me is a translator to connect between the database for financial institutions and the traditional database. So it makes us easily to be connected with the Web3 technology.
Very good, thank you. I like the passion here.
Thank
so
you.
let's go to the other side then, because we've both been actually into financial, TradFi, but
Yes.
you have also evolved into more of the digital world now for long years now. Could you
Right.
please tell me what your perspective, because you've been in both worlds, these are a bit more nerdy,
Yes.
nerdy guys on the digital side.
Yes,
like-
I would like to say that, taking care so many years, over 20 years, let's say, of the old money. It's like money of commodities, infrastructure, like oil clients and different other clients around the globe. And of course, primarily, I had a focus on the ex-CIS countries. That was one type of banking business and one type of, banking life. After crypto, Web3 come into our life, and also I joined to this new community, being a director of the first crypto bank in Zurich, working with the clients internationally, understanding the great challenging projects they are doing and technologies which are coming in our world. I want to say that we should for sure focus on these Web3 technologies, on crypto, and understand that this is our future. For example, I'm also personally fascinated some VC funds now in commodity area from US, because I do business consulting just from my personal business advisor life. They have some totally interesting, innovative quantum computer integrated technologies for commodity funds, which never exist in this world. And there are so many different new things happening that we just have to open our arms and embrace them. Invest in them, stay focused on these areas, not to miss them. Because when the crypto appear, many investors didn't believe in crypto. And then many of them regret that they would not buy crypto at the beginning. So this is what I want to say, that the people are usually they are shy at the beginning and unsure and feel insecure. The investors feel insecure if there is something new happening. But I want to say that we're definitely now in the new era of new money, of new technologies, of Web3, and our life will change tremendously with these technologies, with new banks, as we have now on our panel, some of representatives of such banks. It will change our life. And maybe soon we even will have only digital money, who knows. So jump in the future, step in it, and we are here to lobby a business, to advise on it, to give you our experience, competence, not only here from the stage, but also after the stage.
Sure, and it's really nice to see that actually the TradFi is getting more and more close to Web3.5, because that's the future. I mean, there's no other way to put it. Carlos, what do you think?
Yes, well, I totally agree with all positions.
Thank
I will just add, I always say this in different, I speak in a lot of conferences, and I always say the same. And I've been saying this for the last 3 years. It's like blockchain technology, Web3, the technology underlying has come to save the banks. The technology, the Web3 technology applied to traditional finance is a complete game changer. And at this point, we all understand that, okay? Now, we have all said, no, Web3 technology is fantastic. It's about, individualism, privacy, freedom. Why haven't the banks all disappeared if this is so great, if this is so fantastic, right?
Right.
Why? It's pretty simple. Trust. Okay?
For sure.
Technology is fantastic. It's great. not even the top bank in the world, like could be Goldman Sachs, JP Morgan, Bank of New York Mellon, is going to do catch up with guys like Dextools or Binance or Kraken, whatever. You know, the technology race is lost, but trust. Trust is very important, okay?
Yeah.
So that's what traditional finance we bring to the table, okay? The bank I work for is been run by the fourth generation of the same family, been on the market for 70 years, like huge ratios, liquidity ratios, capital, regulated. We have lawyers, we have risk guys, we have compliance guys, we have all the boring stuff, okay? And that's why the moment we open the door for crypto business,
This congratulations. Huh?
we are attracting whales. We are attracting native people. Why? Because we're solving for so many problems that many people don't think about on the Web3 space. What happens with inheritance? Okay? What happens if you hit your Lamborghini on the next, the next curve? Have you made provisions for your family, your friends, your wife, your kids to access your digital wealth? You know, I speak with a lot of people, and I could say 8 out of 10 haven't think about that. And that's solved.
That's very true. That's a good point.
Yeah, and that's solved on the traditional finance side.
There are some, because I'm specialized sometimes, as I told you, in business consulting for startups and existing startups, unique in the world.
Yeah.
There are already such things, financed mostly very often by US or Asia. But there is something like this. One of my clients, for example, I don't want to do an advertisement with the names, but they did a kind of bank of memories, and everything is held somewhere in the cloud. So it exists, such a database, but I'm so happy and delighted that it integrated in a normal private banking life.
Yeah, sure, and that is the only way to go, because we need to combine those for some years now, and then we'll see what happens in the future. But let's dig in deeper, because if we would like to see Web3 grow, then actually we need to understand the tools. And I would like to start on this side again. What kind of tools do we have in Web3 finance as of now? Because it's been growing fast the last few years.
I think the tools would really depend on what you're trying to do. If you're trading, there are different set of tools, from intelligence tools for you to find where the money is moving in Web3, for you to follow that, like what Arkham does. You have tools for DeFi dedicated to DeFi to find where you should put your money, where you should allocate more capital than the other. Especially if you look in the last 6 months in the after the Egan layer and symbiotic progress started, there are so many new tools like Melo and many more coming up, trying to just capture that market of, I would call them as derivative markets. You have on one side the amazing opportunity of restaking and things that are building based on that, almost like funds and hedge funds and different kind of liquid funds. So there are like a series of tools that are built over the course of last 6 to 8 months, not long, it's not an old industry, but those are constantly evolving and changing. And I don't think there's one set of tools you can ever say as, hey, this is my toolkit for Web3. There are tools for you to just find your airdrops. You realize suddenly in a particular chain you ended up having $100,000 sitting there. Nobody told you, hey, your money is out there, right? So it is important to keep exploring based on your area of interest, on things that you're doing, actively investing. For example, we are on the lot on the VC side, and we don't have a lot of tools around the venture capital side other than you doing your diligence to find out what it is. Because on the venture capital, it's all about the connections and network, and knowing the people, finding out what's happening to find the best opportunities, and knowing the people. It's a business with the founder, really. But when it comes to DeFi, I think there are hundreds and hundreds of tools coming up, and the only way to know is if you're actively trying out every tool. I think one of the things that Carlos mentioned that I would definitely bring up here is a matter of trust. There's no tool out there which has been there too long for you to trust unless you try it. You try it, you test around, you see if it is good, and if you're happy with it, you study the code base, you validate that it is something that works for you, it works for works for your needs in a safe way, tangible way. There are necessary audits, and then you work with it. But I think one of the reasons why Web3 grows fast is because everything in Web3 is open source. Most of them are open source, which means people can fork and improve on something and enhance it. Of course, they can fork and make something bad, add some backdoors to it, but they can also enhance it. So it is a vigilant space. It's a space for, at least at this point in time, it requires vigilant people trying, testing things out, working with things, figuring which tools would be the best fit for them. But the next cycle around those tools may not exist. And it is an ongoing learning process.
It's a big learning curve for sure. But it's also a natural growing curve because this is something new and we don't have the trust as the banking sector has been for centuries, right? So it's in that sense, we just need to stick
you're
in
trusting the code here. You're trusting the community here.
Exactly.
It is a discovery process that you're all doing together and learning from it. Sometimes it's good, sometimes it's bad, but we're talking about an industry which is probably 10 years old, or even DeFi, which is more like 3 years old compared to other industries which has been there for thousands of years or hundreds of years at least.
True, and that means growing pains for sure.
That's why mass adoption, that is not the right environment for mass adoption.
Yeah.
Yes.
You know?
But I think that if we will speak about trust, about banks and about mutation of the banks from classical private banking to crypto banks, for example, what I have experienced in Falcon, been directed, that it's a very nice tool, crypto bank, to have trust, because actually the client can transfer his crypto, he's safe, he has, he has an opportunity to be in all private banking world, but also in the crypto bank. It's nice to have this mutation of all banking system and crypto system, and also all the technologies which we have, with AI technologies which help us to, with KYC of the clients, and all together will give for sure, showing the best results. So it's already trust that it's all with implementation of artificial intelligence and that it's combined, you know.
I think the best part could really be just to add to this, if both the technologies could join, like I can see MasterCard having many experiments going on in Web3 and many others, if that can really happen, because I have an experience working with JP Morgan, for example. When we invested into TON, it happened through JPM. It took 2 months to onboard me. And from that point, now if I need to really look at anything, what is happening in my portfolio, every 3 months, they put some data together, which comes to me after the 4th month. So I have to wait 4 months to find my NAV, what's happening with my investment there. Even if I get into it right now, it is not in my portfolio. It will only update in the next 4 months after.
Yes.
What if all of that can be instant? Because I'm used to DeFi. I do something, I go in there, I check in the smart contract, I can see the cents adding up, 0.001. Right now, it's adding every second. Right?
You didn't have online banking to watch your portfolio.
Yeah, it comes every 4 months in a document.
And okay, you see, so that's why we have the owners of the new banks who are with us on the stage, and we hope they move the future banking system.
This is why we have this discussion.
And we have the clients and investors here on this sides. So this is like we meet all in the Web3 stage, the private banking forces with nice investors.
And also one very important things that Web3 financial tools is not only about the public and the banking system, it's also about the Web3 tools to connect with the national governments. As we know today, it's been developed DeFi like 5 or 6 years, especially in 2 years. However, if you find that not only one country, not only Asia, but also European regions, most of the governments, I say governments, they don't accept DeFi. Why? Because I've been working to meeting with a lot of the governments represents about, hey, can you work with our financial institution to more about DeFi category? And they told me, Mr. Alwin, now you are asking me about one question. So DeFi is about decentralized, am I right? The main call that we want to develop is decentralized. Now you are telling the government, I'm sending the money to you, you're sending the money to me without the monitoring, without any know of the national banks. Do you think the national banks of the government can accept it? They won't. They say, until Web3, the tool is being developed. Why? Very good point from you, because the government didn't trust decentralized.
Yeah.
And now you tell me you're doing some financial transactions without the national authority being tracked. Then how could I know my people they're balancing their account. How do I calculate my country GDP? How do I increase my rate in my country? They say that until the Web3 financial tools has been developed. So nowadays you can see from some country, I didn't know in Spain, but in Asia, especially in Hong Kong, they start using the Web3 financial tools to be developed some DeFi investment activity.
Yes,
Absolutely
exactly.
great. Absolutely great.
This is what I'm, the way I'm doing it in my bank is basically what I'm doing is just removing complexity from the Web3 world, and what I'm doing is I'm basically doing it the other way around, right? I'm just transforming, very innovative digital products into traditional ones, and then people understand. Yes. Suddenly, when you accept this as a new asset class and you treat it as any other, as a bond, as a fund, as an equity, as cash, okay? That's the moment that's where all the issues start to disappear, because then the regulator understands, the government understands, your bankers understand, your clients understand that, hey, why not having 5% Bitcoin allocation into my portfolio? Yeah, that's it. Click the button. That's it. You have it. The same as you were like buying, I don't know, Tesla shares or whatever. So this is the way we are doing it, and it's working pretty well. Obviously, we are kind of violating let's say, the spirit of it. But I think mass adoption, well, that's the way I see mass adoption will, little by little grow.
It's true. It is the only way, the hybrid form, because people need to get used to the idea of having digital money, which is a new concept. So it is very true. Did you want to add something, last thing?
Yes, last one is, believe me, Web3 is the tool that who not only connect us to the public and also to the government regulator. Because we run, I cannot say the name because we signed the secret agreement. The bank, we told them, national banks, that we will run the investment. Probably will be in China, in Asia, in Hong Kong, that some crypto activity. And then before we told them about blockchain, they didn't understand, because in their financial system is designed by the USA 80 years ago, which is belong on the SWIFT structures. And we are running a blockchain with a hash structures. They don't understand. We told the bank, if you want to accept this ETF, for example, you have to pay the gas fee. The bank say, what? What is gas fee? And then when we introduce the SDK tools of the Web3, this is our blockchain wallet. Finally, with the Web3 tool, we can connect to the bank system. They start understand, this is it. So I think Web3 tool is playing a very big role in our financial institutions, not only to connect some people like us to the public, or the blockchain user, and also, what is Carlos' name is, we build the trust with the regulator for the authority. This is very important, that the Web3 technology to play the role.
I think,
so we can agree we have a lot of work to do.
Yeah. I think the best part with Web3 is it doesn't really violate the ethos of Web3, primarily because it's a toolkit, right? Anybody can use it in any way, manner, or form. If a user believes that it is to their best interest and centralized entity manages it, like what centralized exchanges do or any other ETFs do, Web3 is okay with that. Web3 is giving all these toolkits for people to use in any manner and form. If people are happy and comfortable with one way or the other, if they're happy with the risk and they want to be degens, they have all the tools for that. If they want to go through a regulated instrument to manage their money that leverages and uses the power of DeFi to make them profit, that's great. There are a lot of hedge funds and different funds that are doing the job. And it's almost like a database. You would never say MySQL database is only for people who are using something out there. Anyone can use it. Anyone can use it in any manner and form. It's all left to the choice of an individual to decide which direction they're going to take. Do they have the time, energy, effort to go through the native way? Because with all this rights comes responsibility to learn educate and be accountable for themselves. If they want to shift that accountability to someone else, if they want to shift the responsibility to someone else, they need to pay them for it and work with the system that someone created. Sure, there'll be degen funds, Web3 funds, smart contract-based funds. There'll also be sophisticated banking funds that banks and institutions will come up with. And people have a choice. And that choice is what makes Web3 the most beautiful thing out there right now.
Very good. I like the passion. I mean, we could talk the whole Dextools Festival about this for sure, but we're running out of time. So the last question for us all is, what is the future Web 3.5? How do you think about it? Let's say, not in years, but in the near future. How do you see, Maria?
You ask me? I'm a big optimist. I see the great future of Web 3. I'm so happy to be here today on the stage with amazing specialists in this area, the gurus. And I'm so delighted to have clients in Web3 area which have unique approach and unique business models. And I'm sure we're going to make a revolution and we're going to live in a new world. And
we already started one.
Yes, but it continued progressing like a wave. You will not recognize our world in 10 years, no matter of governments. They will agree, finally. We are on our way.
Carlos, what do you think?
Yeah, basically, I see huge changes coming. It's like for instant payments, international cross-border payments. There's a massive unlocker for any kind of business, and that's going very quickly. We're running pilots with some clients already for a stable account, current account, and it's crazy. It's crazy, you know, the time and the efficiency that you can unlock just by switching from regular euros to tokenized euros. It's amazing. At the moment, you know, the industry realize that, and also we have, you know, clarity in terms of regulatory environments, and, you know, all the regulators more or less come to the same conclusions. That's going to take a while, unfortunately, but the technology is there to really unlock a lot of wealth and a lot of opportunities.
Yes, we don't have a lack of technology for sure. So, Alwin, last words. Let's try to keep it short.
Yeah, I will, because Web3 is important for me and for you, for the people who running crypto asset. This is very important. Why? For example, very short. Today, how do we define Carlos is rich? Sorry, as an example. In the old time, if Carlos drive a Ferrari in this area 2 times, 3 times, and with some Lamborghini, oh, Carlos is rich. But nowadays, if Carlos show people, I have 100 Bitcoin, super rich. You see, the transactions about define rich in old generation and new generation. So, in this point, building well with the Web3 is not about some physical thing to prove our web or to be running our web. It's the Web3 technology to make our web, our money, our asset from the crypto base become the real world except tokenized. So Web3 is playing a very important role. And last one, we hope that in future, when we go to the bank, Santander Bank, we tell the bank, I have 1 Bitcoin, I transfer to you with the Web3 technology, just give me the euro. Because now when we go to the bank, we give you 1 Bitcoin, can I have a euro?
That's a reality already. That's a reality already.
Yes, you understand what I mean?
I can do that.
I think you have a lot of Bitcoin.
My clients do.
Mr. Key, final words for 10 seconds.
Yes, follow the money. BlackRock is creating this whole huge fund and focus on real-world assets right now. So I think few years in the short term, you would have your phone and you would show you have ownership in a house and somewhere, you have money in different forms of currencies, forex, you have a ship and a helicopter or parts of it. You would end up with all the global commodities on your phone tokenized that you can buy and trade. Savings will die. All the new money that's coming up would be connected to the bonds, and the bonds have inherent returns, and the new stable coin and the new form of money that's coming up would be with native yield. And the world of what we're going to be seeing in the finance, I think it's no longer just the traditional finance. It's one finance powered by
True.
Web3 around the world.
Thank you.
Cool.
So learn to do Web3 financial instruments. That's the key. We need to learn because we need to adapt. It's not going anywhere. That's the conclusion of all of this. Join the rebellion. And thank you so much. I really enjoyed this panel. Thank you, thank you.
Thank you.
Imagine a world where the rules of the game change constantly, where fortunes and money can be made or lost in a matter of minutes. This is the exciting world of DeFi and Web3. Welcome. But while exciting, this rapid evolution brings with it a difficult challenge, and that's building trust. And this challenge is especially huge to tackle for new projects. Because in a world filled with bad actors, crypto scams, and rug pulls, a new project will have a very difficult time to build that trust around themselves and to gain the trust, basically, of their potential customers. But there lies a powerful strategy that they can use, and that's content marketing. I don't know what I did. Okay. Content marketing is a way to gain the attention of your users, to position your project as an industry leader, and to position yourself as a thought leader. And it's a way to build a community around your project. And in this keynote, we're going to talk about content marketing. So what you can expect is to discuss about the importance of trust in DeFi and Web3. We're going to cover how to create high-quality educational content, and how to build transparency and trust in the crypto market. First off, the importance of trust in DeFi and Web3. This trust, building this trust, is especially important for new projects. Because without trust, even the most promising initiatives can crumble. The lack of trust brings with it various challenges, such as decreased user adoption, regulatory scrutiny, or even potential market crashes. And sorry. There's a way for projects to tackle these challenges, and all they have to do is to provide valuable information, to address user concerns, and to foster open communication. And by doing this, they can actively take steps into building trust, into putting their project out there, and into gathering new audiences and new customers for themselves. But let's talk about how to create high-quality educational content, because at the base of it, that's what really matters. And the best way to build trust is by educating your audience, because once you do that, as I mentioned before, you are able to position yourself as an industry leader, and you can showcase your expertise, your transparency, and gather new customers and attract new leads. But before we even discuss how to create new content, high-quality educational content, we need to understand who our target audience is. And this is a crucial step because it's going to help us better deliver our messages and better get to our customers. And one of the first things we can do is to create buyer personas. which are detailed characterizations of our customers, and they should be based and include information such as demographics, their preferred device type, for example, or their location, or even their job title. And it can also include information such as their interests and their pain points. Another thing you should do is to conduct audience research. And you can do this by using general surveys and gathering data directly, or by using social media analytics tools or Google Analytics or whatever tool you use to track your customer interactions, or even by asking your customers directly for feedback, because that's going to also mean a lot to them. Or another way to understand who your audience is by segmenting your audience, and this is especially applicable if you have a large enough audience. Also, this will allow you to better solve the issues that your customers may face and to deliver personalized content to them. Another tip is to use clear language. So we all know that the blockchain space is filled with technical jargon and complex terminology. So for example, if we go to one of our non-technical crypto friends and we try to explain to them what our business does, and we use terminology such as, by leveraging blockchain technology, our decentralized application facilitates peer-to-peer transaction. That's going to be a little bit confusing. So a better approach would be, our platform helps you lend and borrow cryptocurrency directly from other users. This is clearer, it's more to the point, and it better conveys our message. And another tip that ties into the language that we use is to break down complex topics. And we can do this using simple visuals or analogies. So another example would be, blockchain is a distributed ledger technology that records transactions in a secure and transparent manner. This, once again, if we explain it to someone in this way, they might understand what we're talking about, but they also might get confused. And another way to do this would be to imagine you have a group of friends who want to share a recipe for a secret family cake. But instead of just telling everyone that recipe, you write it down on a piece of paper and give everyone their own copy. Now, if someone tries to alter that copy, to change the information on it, everyone can see, because you can compare it. And that's kind of like blockchain, because it's a way to securely store information and to make sure that everyone has the same data, and if someone tries to change it, everyone can see. Another thing you should do is to provide guidance. And this goes beyond simply creating content. This is about taking the hand of your customer and walking beside him every step of his crypto journey. So for example, you can create tutorials and guides and teach your customers how to use your platform, how to tackle common issues that they might face, and how to approach different situations with step-by-step resources. You should also offer templates and resources that are relatable to the issues that they might face, and also try to use case studies and testimonials, because one of the best ways to build trust around your project is by showcasing how other people used it, how they were successful, and how they were satisfied with the results you provided them with. And last but not least, try to encourage engagement, because this is going to be a win-win type of situation. If you manage to encourage engagement, your customers are going to feel more loyal to your brand, and they're also going to start recommending it towards their friends or towards your possible audiences. So you can host Q&A sessions with your users, you can create online communities, and this can be done on various social media platforms such as Facebook, or you can even use Telegram or Reddit. And also remember to consistently ask your customers for feedback, because this way they're going to feel like they're part of your project, and they're really going to appreciate that you involve them and they have a say in how things are done. Now let's talk about building transparency and trust in volatile markets, such as DeFi and Web3. This is a thing that you shouldn't look at it like a one-time deal. Like, you're just doing content marketing. I'm going to do this for a couple of months. This is a one-time activity. This is something that you should do consistently every single day that your business operates. So for example, the first thing that you should keep in mind is to try and keep your customers informed. And this means informing them, letting them know of whether you are planning to release new updates, whether you're planning to discontinue current functionalities of your platform, or whether you're planning to basically change anything major about your product, because this is probably going to impact them in some way. And they're going to appreciate that you let them know beforehand. Another thing that you should do is to address concerns promptly. And this is especially important during times of crisis. And believe me, you're going to have times of crisis during your business. And your users are going to appreciate that you're honest, that you're communicating with them, that you're letting them know what's going on. And thirdly, try to demonstrate a commitment to improvement. And what I mean by this is to actively show that you're trying to be a better product and you're trying to do better. And this is going to happen by also asking for feedback and by, for example, hosting Q&A sessions like I mentioned before. But this is not the only way to build trust, because you can also build trust through other activities that are not related to content marketing. And one of the successful methods that we applied at Coinzilla was to partner with huge brands in the crypto sphere. So for example, Dextools, Blockchain.com, CoinCodex, CoinGecko, or Etherscan. These are brands that we work with and have worked with for a long time, and our partnership with them helped us establish credibility and become a reputable source in the crypto advertising industry. So to sum everything up, 1, trust is essential for DeFi and Web3 success. 2, content marketing is a powerful tool for building trust, but make sure you use it regularly. 3, try to create high-quality educational content, but before you do that, remember to conduct proper audience research and always remember to use simple terminology and dump the complex language. 4, build trust through partnership and through consistent communication. And 5, prioritize content marketing as a long-term strategy. This is not a one-time thing. This is a long-term relationship that you should have with content marketing. Thank you. Enjoy your lunch and enjoy the rest of the panels.
Let's go.
Let's go. Ooh.
Hola.
Hola. Buenas.
Buenas.
Hello, beautiful people. It's beyond cosmic to be here. It's the second edition of DexForce, and we are back.
Yes, absolutely. And thank you so much to Vasi, Jorge, and everybody else for having us back.
Yes.
I'm Stuart Rogers.
And I'm Ksenia Stark.
And together we are Confusion and Joy.
And today we are going to tell you something very important and dear to us. It's our keynote on Rip It Up and Start Again, and why we need to ditch darketing and reimagine growth. So let's go.
Let me tell you a little story. Community connected us. We met and we connected on values. We discovered we were doing similar things, working towards diversity, equity, inclusion. We became friends and started working with each other. We met in NFT Tallinn physically. We continued to work with each other in the metaverse. And then I invited Ksenia to come to Helsinki, where we built other communities. And during that magical moment, we fell in love.
Yes.
Yes.
And that's the story when it's very important to connect based on values. In our case, it led to the love story, but we know that this is how you can build strong relations with the people. And internet brought us together to connect and share knowledge and values. So initially, internet was designed for communities. However, we turned internet into the fastest supermarket.
Literally the fastest supermarket we've ever known. We are just trying, all of us, at all times in business, on the internet and elsewhere, to get as many transactions done, get as much money out of people's wallets as fast as possible, and we've turned it into a video game. We use gamification all the time, and scarcity all the time. It's always that story of, subscribe, download the app, link in the bio, join now, click here to register. Everyone on their YouTube videos, it's, drop a video, but don't forget to like and subscribe halfway through, and then at the end.
So we would like to introduce you a term that we coined. It is darketing, dark marketing. It's manipulative strategies that are aimed at overselling products that are pushing you to buy, subscribe, download.
And, we've made this even more possible. We're producing more information in a month than we've ever produced in the history of mankind. And most of that information that we produce is used for free without any compensation to make billions for some corporations. You're giving your data for free, they're making huge profits off of you.
So we call it the darketing era. And we're all chasing shiny objects that are being thrown at us. One example is Silicon Valley model that actually has 99% fail rate in year one, but we still want to be that guy, that billionaire, and we keep building something that's not needed. Also, we start using all these AI tools and automations, because we think that cold outreach is still a great idea. And we're coming to the tipping point, shifting from Web 2, platform economy, we're being abused, to Web 3, the creator economy, decentralized world.
And Web 3 is not about tech. It is about tech if you're Tim Cook. He says it's all about AR. He's got glasses to sell you. Surprise, surprise. If you're Mark Zuckerberg, Web 3 is all about the metaverse, and as was recently announced, also about glasses next year. Why? Because Facebook make most of their money, Meta, from advertising. They just want to make ads more immersive.
So this is the honest state of Web 3, which is basically capitalism on blockchain. So we've been analyzing the Bitcoin ownership, and actually less than 0.1% of Bitcoin belong to more 60% of people. Which is no difference to what we're having in the fiat world. And our friends from Global Citizens, they released a report where we see that the richest 1% own almost half of the world's wealth, money and power.
And as we say, it's not about tech. Web 3 is not about tech. Growth is not about tech. We think that if you want to build your company, it demands a new ethos that changes the way we do business. Like, why would we just do Web 3 the same as Web 2 with the same, different technology, right? We think it's about collaboration, cooperation, co-creation, communicating directly with your community. And we call that the sea of change. And it's all the C's that are the good ones, not the damn competition C. We need to ditch that.
So collaboration actually creates a ripple effect. Communities that work together, they shape their ecosystem to share the resources. We have crowd filtering and not targeting, because if you have people based on values, shared common values, they will filter out the people that are not meant to use your product or service, which does enable organic growth, or word of mouth, as we call it. And that creates the raving fans that want to ambassador and advocate for you. And of course, incorporate impact all down the chain. And we compare a competition mindset that normally is present in our world with collaboration mindset. So a question, why do we fight so hard for a bigger piece of a small pie, a cupcake we call it, while we can all have a fair slice of a much bigger pie by working together?
Yeah, I mean, if you think about traditional marketing, you know, I used to often think about it in terms of there's a wall in front of me. And you are building like personas, and you're building targeting ideas, and et cetera, and you just come along and you're trying to tap, tap, tap in different places along that wall until you get the glory hole. And then you rush through and you try and get everybody that matches the same persona, the same targeting. But if you build a really great community that's two-way, that has value sharing, those community people can be in any vertical, any target, any persona. They are going to all get together. They'll tell others about you. And then they're on the other side of the wall. They're just going to push the whole damn wall down for you.
This remote control is definitely Web 0.
That's a darkening
fantastic. The real circular economy is being created by forming those communities, because it's not just about your inner circle. It's not only about what you build. You need to understand which ecosystem you're tapping in. You need to create value for yourself, for others, and for the whole community. And it's also called conscious leadership. You know, when you're a conscious leader, you're acting in the interest of humanity, and you co-create and you fairly share the profit.
And it has to be focused on impact first, and authentic impact. Not that thing where you change your logo to a rainbow during Pride Month, but you've got a terrible history of supporting LGBTQ+, too many letters and a plus on the end. You know, you support that community, then you have the right to put a rainbow on it. You have to connect at a human level with everybody. You've got to think in terms of ecosystems on one impact mission. Like, I promise you, if you get all your competitors together and create an association, and you will support each other, and you bring in scientists and, you know, users and, you know, so on and so forth, who's going to be the thought leader in that space? The one that created the association. Everyone else gets to benefit, and you all get to educate the market together, much, much cheaper. You need to monetize at the early stages. Like, stop building stuff based on an idea and try and get money to make it happen. You know, it's about authentic impact. It's about creators and co-creation. It's about community and real connection. And it's about your conduct and your conscientiousness.
And we eat our own dog food.
Yep.
We believe in this, and that's what we do for ourselves too. Conduct, creativity, connection, that creates a real magic. And we've been working for just slightly over a year, bringing this creativity, incorporation of creators into brand strategies, you know, creating meaningful experiences, bringing tantra workshops on tech festivals too, just to bring this down to human connection. And this is kind of an overview too of what we've been achieving with our friends and family. We don't call them clients, because clients is something transactional when you just want to, you know, sell a deal, then the next one, upsell, and all this stuff. We don't work with people we don't want to hug.
That's right. I mean, in fact, in the last 15 months, without a real website, to be honest, without any social media to speak of, without email newsletters, podcasts, and all of that other stuff that everyone else is doing, just by showing up and showing through our actions who we are and what we do, and people come to us and say, we like you, we want to work with you. We've done activations and experiences at Berlin Pride, Art Basel Miami, 3 events during World Economic Forum, including an 18-hour-long gala and summit. We did the Global Sales Tech Festival at Mobile World Congress. We've spoken at all of these amazing events right here. We have done strategic community and ecosystem and authentic outreach and impact work with amazing startups and scale-ups and people who've been around a long time, like Icono TV, which is basically Netflix for art and impact movies, and they show at COP. For Factiverse, which is one of the most unique AI solutions out there. It's real AI fact-checking that actually doesn't just tell you this is true, this is false. They let you make a human decision based on all the information they give you. And they've been live fact-checking the US debates. That's how fast they can do it. And we've done all of this without any of your traditional Web 2 fastest supermarket in the world bullshit.
And the hand of confusion and joy is changing everything. We want you to believe in yourself, find your values, what you stand for, understand how you can build these long-lasting relationships, and do what you love and work with the people you love.
And do it with love.
With love, do. And we love you, beautiful people. Enjoy this awesome day.
Yep.
It's going to be a lot of fun tonight, too. And that's what Vasi was telling at the beginning. Don't give business cards. Just talk to people. Understand if these are the people you would meet outside of work. Build the real connections. You know, we do connect on the dance floor, too, you know, so you can always spot your people anywhere and be open-minded. Ask the right questions.
That's it. Thank you so much, everyone. We appreciate you.
GM, how is it going? Hello. This is our session in the afternoon. So this is about the power of the community in Web3, rethinking approach to traditional industries. Let me introduce myself. I'm Alberto. I'm a chief beer officer of Mutants Beer. It's a community brand related with the Bored Ape ecosystem. So everyone can presentation about yourself.
Hello. Hello, everyone. Thank you for having me here. My name is Alex Barutsky. I'm co-founder of IME. IME is a messenger based on API of Telegram with a self-custodial crypto wallet and a lot of integrations like Binance, Binance Pay, 1inch for swaps and staking. So we have like 20 killer features Telegram still doesn't have. And regarding numbers of our community, we have almost 15 million downloads and 1.3 million monthly active users. So basically, if you download IME from Google Play or from App Store, you can boost your experience of Telegram and enrich your environment with a lot of functions like sending crypto right in the chats and using swaps. And we have beta sorting, beta cloud system, and we have AI, which is also integrated into application, and you can use AI from chats, even from almost everywhere. So I can talk a lot about my application, but here we to discuss. So if you have any suggestions, how can we cooperate and how can we make any things together, don't hesitate to contact me after that. Thanks.
Hello. This is Jori Armbruster, co-founder of Ethic Hub, which is integrated finance and trade for the coffee supply chain for now. So in Ethic Hub, basically you lend money to farmers or you stake on their behalf, so other people lend them money because you took the risk of default. And all the money goes to help those farmers export, and the loans are paid with the coffee selling process of it. And we have been around for a very long time. We were launched in 2018, and we are supported by huge institutions like Inter-American Bank for Development, And we invite you to try our new B2 platform that we are launching just these days. So please go to ethichub.com and try it.
Great. Alejandro Gutiérrez, I am the CEO of MPayMe Labs. I have been in the space since 2017 and have done all sorts of weird things from DeFi, RWAs, and right now with MPayMe, we are a decentralized network of applications that are helping content creators, gaming communities, and brands to better or to create most efficient strategies in order to monetize their content and also engage with their existing communities.
Hi, my name is Sabine. I'm also in the crypto space since 2017 on a professional basis and have launched and helped build several projects. And now I built Crypto Play. It's an affiliate and kind of launchpad platform where I connect projects and startups with partners, with investors, help with exchange listings. I work as a consultant as well with the project. Yeah, so I know a lot about community building and growth hacking and basically educating the Web2 people to get into Web3.
Great. Thank you. Thank you so much for being here. So you know that communities are more like fans of a music band than a customers of a company. So everyone wants to have a strong community. This is one personal reason that I get more involved with crypto communities, because I see how it's going with the NFT movement, with the Bored Ape community, and I say, okay, this is something that I want to be involved with. So in Web3, we have a new panorama that it's open because we have new ways to increase the engagement with our communities with different tools. So the first question that I want to do today is like, what incentives can we create in Web3 so multiply the engagement for our members of communities? And everyone can.
Yeah, look, I think you explained pretty well. There is a huge opportunity in there, especially the way that Web3 or the ethos of Web3 that is like, okay, that cooperation between the entities that are, for example, creating products and the communities, right? And a lot of the cases, when it's managed properly, it works pretty well. One thing that, and this is not just in Web3, but is actually in general, like there is a lot of information right now in social media, and it's really hard actually to just get engagement for people. I think there are some statistics that are telling that around 63% of creators or people that have content in social media, the engagement doesn't pass from a like. And I think Web3, in a way, can just help changing that statistics. Like what we are testing right now is, for example, token gating for experiences, and that works really well because you can gamify the whole experience for people. And Web3 has something that is fantastic, right? That is that proof of ownership that in Web2 is really difficult to just get or track. Saying that, right, like we're still having some issues from the usability perspective, right? And I think when that usability is fixed, we're going to just be able to get the engagement that we want using Web3 technologies, right?
Mm-hmm. So I think that's one of the key questions on Web3. The difference between Web2 and Web3 is in Web2 projects were centralized and you were just a user, and for sure they want to convince you to use the platform with good user experience, but at the end you were the product normally with your data, and at the end if you provide a lot of value to, I don't know, YouTube or Facebook or whatever, you are not paid proportionally to the value you can add to that platform, providing huge content, very interesting, whatever. And with Web3, we are in a place that you can create a real decentralized project in which users feel, and because it's true, that they are part of the value creation. No?
Yeah.
The part of this value capture goes back to the users, because at the end that value capture goes to the token instead to the equity holders. And so if that project is redistributing the tokens fairly to their communities, they really can be something very different from traditional Web2 companies, right?
I would like to add that the most important thing for me is to attract new users, and I think this is the problem for everybody. And we need to understand that users must get the simplest instrument to dive into your product, into your project, and we all need to use very hot features and hot instruments and tools right now. We have Telegram mini apps, and this is a huge amount of users, potential users. So the industry is developing very fast, and it's absolutely necessary to understand that what is hot today is probably will die in 1 year. So right now we have Telegram mini apps, and most popular Hamster Combat has 110 million monthly active users. So it's a huge amount, and but who knows how they will convert these Web2 users into Web3, because their initial idea to get all these users and expect that all these sellers will become buyers or users someday, it's only an idea, and we are not sure will it work or not, but we need to try every new instrument to bring more users into Web3. So don't stop, make all experiments you can do.
Yeah, so there is a difficult line between user engagement and like active users that really want to contribute or just in for the quick money, right?
Yeah.
So I really love the DAO incentives, and that a lot of projects go into a DAO where you get the community involved and engaged, and you reward them. But then you also have to make sure that the reward is really based on the contribution, and not that you just reward them for staking only and then they don't do anything and contribute. But that's the main difference between a community building in Web3 and Web2, is that in Web3 you really can include the user into decision making, into the processes. It's a lot of open source, so they can build on it. And in Web2 it's mainly just get users, sell products, or create apps. But that's also important. You have to create also in Web3 an app or an application that users want to use, that is fun to use, that they have use case for it. So yeah, the tap to earn game is super, super hype, and it's crazy that they create hundreds of millions users within 2-3 months. But it's just mostly bots and people from Pakistan or whatever that just tap and try to make some money with it. These are not the people that will actually invest or really help your projects getting forward. But you have a big number of users.
Yeah, of course. So, and this is a big panorama behind us. So, what Web3 tools do you know that are using to boost community engagement, community participation, like NFTs, DAOs, sub-DAOs, tokens? How about that?
Yeah, as I mentioned, these are all apps and use cases to basically onboard And there is always hypes in crypto. You have to be very early at the hype and ride the wave because a hype dies within 3 to 6 months. Meme coins is now the third time a hype. It's just always a different blockchain. So let's see what the next hype is, but we all know that meme coins is just...
It's the new narrative.
Yeah, it's
What chain is now on? Like the last time I checked was Solana, so where is now?
Tor.
Okay.
So yeah, it's basically gambling, right? Before you buy a lottery ticket, you put your $10 into different meme coins and hope some of them will 100x. So, and everyone knows that it's gambling. So, but they still do it.
Yeah, actually, it's very, very sad narrative. And regarding statistics, you know that during only this quarter, more than 3 million meme coins were created. 3 million different meme coins were created. So this is the same problem as we have with bots. So all these crazy guys create a lot of things, and from my perspective, they ruin the ecosystem, because if a system has 3 million dead essences, it's so hard to find something really important. So with blockchains, we have Sibyl problem. With tokens, we have meme tokens, meme coins, and this is the same problem. So I hope it will be solved someday.
So can I ask you a question? When you say solve, what do you mean about solving? Like
I don't know, but this...
Like from my side, like I don't think it's anything bad particularly about meme coins, actually. And we're talking about communities. Like there are a lot of those communities that are really interesting. And there is a lot of stuff that came actually out of those communities. Funny enough, like they shouldn't, but they have fantastic marketing, way better marketing than a lot of setup projects. So I don't think per se that meme coin is a bad idea, because as I say, it's a community, but it is more about, okay, when you have actors that are just using that to, well, just extract liquidity from the system, right? Like probably that's the bigger issue that I see on it, right?
Yeah, the idea of meme coins is not bad, but imagine you are a guy and you want to dive into this industry. You want to buy something, so you bought one meme coin, you bought two, you bought 100, and all these meme coins will die. Statistically, 99.99999 will die.
Yeah.
So you just killed a new user.
Yeah.
Because this user wanted to do something with memes.
Yeah.
Or like 3 years ago, he wanted to do something with NFTs, right?
Yeah.
Now he wrecked, right?
It's narrative.
Yeah,
right?
because you will never get him back. So this narrative is cool, but reality is awful.
But it's not only meme coins. I mean, I'm in the crypto scene since 2017, so I have been through 3 bear markets. It was the same with all those projects back in 2017.
Yeah, they all died.
And I can only say do your own research. If you invest in a meme coin, you have to know what you're investing in. If you want to have, you can make a quick game, but go out of it. If you want to just be on the safe side, then just buy Bitcoin. But if you wanna support projects, like I've invested in so many ICOs I met at conferences back in 2017, 18, 19, because I really liked the idea. 90% of them, they are all dead. Same, it's not only meme coins, it's the whole. Also in the Web2 industry or in the normal, 90% of all startups fail within the first 3 years.
Yeah.
So the same is with crypto, right?
But I think there is a huge difference, because in ICOs, okay, 99 failed, not like 99.9999 like in meme coins, and at the end, something really meaningful was alive, no? Which was, for example, Aave or Synthetics or Ethereum itself. So at the end, you were funding very value creation, real value creation things that as many startups fail, no? But when you are funding meme coins, you are not funding basically nothing. You are funding just funny thing, no? You are funding community building. Yeah, it can be, but I have this issue that we are not into the meme coins, but into the trying to get institutions to the blockchain space, and because of pump and dumps and scams and meme coins, the real institutions don't want to. I don't want to be involved in crypto. I want because of reputational issues. So this is preventing the institutions to come to the space. So I think there is a very dark side on supporting all this. And okay, if it is 1% of the volume, or I don't know, it's funny and that's it. It's not what for me is something that is very worrying. Is that it is very significant percentage of all the discussions in the space. We are talking about that here instead of talking about what's the next big thing, no? and how we solve the actual real problems in the world, no? With this technology. That should be what we are talking about, and not meme coins, which are funny and it's not bad, but the problem is we are so focused on that. That's my point. That.
Of course. So, with these of all tools that we have and that change these dynamics, how these tools can change the power of decision making with our communities in comparison with traditional companies?
I think the very real game-changing thing is you switch the business model of projects. Instead of being, I have to sell this to get a margin on that selling process, it is like my business model is the token, and the token is the community, and I don't have a margin because it's spread within all the stakeholders in this project, and this is mind-blowing how it changed, because it changes the logic of I am a capitalistic investor and I want to extract value from this project, to now we are a community, actual community, running this project and sharing the profits of this project. So it's like actual cooperatives on steroids.
Yeah, I think you're just explaining it pretty well. It's just changing completely the structure of how these entities work. And I think for certain industries works better than others. But I think that the key component here, right, is that ecosystem, that community needs to work together, and that everybody needs to actually just put forward the ideas and actually that, or just provide a guidance where this DAO or entity is going to be just moving towards. And I think that's a big issue still. Like, I think we're not making it easy enough. Like you see, like all the big DAOs, there's still a lot of chaos, confusion. It takes a lot of time, a lot of politics behind. Like, because sometimes we revert to what we know anyway, right? But I think as an early stage is pretty promising. And what I'm hoping is that we'll have more decentralized entities, not just in this space, but in any other industries outside the Web3 ecosystem.
My dream would still be that the government would be a real DAO,
Yeah.
that really the people, the citizen can decide what's going to happen, and there is no abuse from the government anymore.
Yeah. I thought it was a democracy, no?
Not really, because there is still somebody deciding for us, even though we vote different, right? So.
And I'd like also to add that if we talk about tokens, we sometimes forget that 2 years ago we used to talk about utility tokens. Now we talk about tokens without utilities. So we just need to remember the idea of token. Token is not only the right, it should have at least maybe one utility, not only to vote, not only to represent that you are a member of this community. Token should give you some utility, and the more utilities token have, the more power community could obtain from this token.
Yeah.
Yes, of course, utility. Yeah. What is the potential of involving customers and the community in the brand co-creation process? So this is an example that we have with the Bored Ape community in this case. We represent beer, but there are more than 500 teams in the world that are co-creating a global brand around one IP movement. So what is the potential of this for the communities?
Yeah, look, I think when you are involving people in co-creation, what you are doing is just bringing them along the journey and for them to feel part of it, right? And usually when you feel part of something, you're going to have a larger engagement and you're going to just be part of a community, even if you are not getting any remuneration, which is funny. Like there are some studies that show that bringing people in the journey and getting them to just contribute, sometimes they don't even need to be rewarded. Right, but I think the beauty out of this is like they are getting rewarded as well in the journey, which means they're going to have customers for life in a way. That's what you want, right? That engagement is what is critical for all the projects. Because like as Alex was mentioning, I think you have a token and that token represents the community. A token without community is going to be dead. That's reality.
But that's what every brand and every token, every company dreams of, that you have your community be such a fan that they are your advertisement, you know. Gymshark, basically, they built a $1 billion brand without any advertisement because the people were so promoting it on social media. It's crazy, and the same happens. I've been to some conferences from token projects itself. How many early investors were there because they just had a lot of the token and they were so supporting it. They were or sometimes even fanatic, just this token. But this is the community you want to have. These are the supporters you want to have. They build on top of you. They spread the word. They run around with the T-shirt. They talk about it. They tell their family and friends, you know. So this is what every project needs to grow organically and real.
Yeah, I will give you one example. So, in order to entertain your community, you can get you can offer them to buy your token, and instead of use a traditional subscription model, you could offer something to your community for free if they are token holders of your token. So in IME, we recently tried to implement these mechanics. It's very, very new mechanics. Imagine you are Netflix subscriber, and if you are owner of one share of Netflix, like everything will be free for you. So in IME, we have IME Premium, and since previous year, we charged for IME Premium like $3. But now, if you are holder of our token, IME Premium will be free forever for you, because we monitor your wallet, and even if you use these tokens in staking, the subscription will be free for you because you are token holder. So this is an example how you can adopt Web2 users and convert these users into Web3, because you can offer them something they want to get in order to get something for free. Yeah. So this is just an example. Maybe it could be
useful for projects, for different projects, guys.
Yeah, I fully agree, and I will build on that. No? So for sure, that's one key point is it is like a vampire attack to Web 2. No? You can bring people from Web 2 competitors because here you have these ways of incentivizing much more strongly to the upcoming users. And so the end goal is how it should be possible to make much more viral things, which for sure is not guaranteed at all. No? Because you have a token, it doesn't mean people want it. No? It is super hard to build something as in Web 2 or in real world, no? To create a product that people really want. Yeah. That's the hard part of it. But some projects have already succeeded on that, no? On having that virality. And the third part of it, and I think is where we are still not yet, maybe in Bitcoin, is the sustainability. No, it should also help to be more resilient projects. Yeah. But for now, it's almost the opposite because at the beginning you have this extra gasoline with your new token, and then this people goes to the next token, no, and the old token goes down. So. But it shouldn't be like that.
And that's a fantastic point, right? Because what you see in this ecosystem, these communities, is that the users a lot of the time are not the token holders, right? And then you have a whole community that is completely different, that is retail investors, and they're the guys that hold the token. And you ask them, have you ever tried a product? No, I'm not interested, but I think this is a great possibility. So that's the question. How are we going to just get the people that are using the products to be the ones that are like behind token holding? Exactly. Right?
Yeah, and this is another big challenge that we have with communities because we're born in digital environments, and maybe you have a great community, a big community, but everyone are in their country, and it's a global world, and it's so difficult to be present in real life. So this is, I think that one of things that can be super useful for that, it's if you have a real product like coffee or like beer that put in the mind of the people, in the new people, not only Web3 native, the things that are happening and the problems that we can solve in the real world. So this is the end of the panel. Sorry. Thank you so much for your thoughts. It's been a pleasure. And thank you, everyone, for being here.
Thank you for inviting.
Thank you. Thank you, everyone. Yeah.
I think. I was really surprised. I never saw me as like a sexy kind of person, and of course that's not me. And also, that's not what I'm going to talk about. And I'm going to try something new. Like, I wake up this morning, I felt creative, so I decided to change the whole presentation. Sorry about that. So I'm going to test it with you guys. But then I need your help. It's quite easy. Like, I have a few slides, and every time I just like go from one slide to another, you have to repeat with me, fuck DNS. It's quite simple. I think you can do that. So just like, say it with me. It's like 1, 2, 3, fuck DNS. Fuck DNS. That's the spirit. Love it. So far, if you think about that, like everybody's using DNS. Like, I mean everybody. And the Web3 industry, believe it or not, relies heavily, everything is like on DNS. And yeah, I know, like most of the people, all of the time, I'm a tech guy. I think everybody knows about technology, and I know that's not true. So if you think about DNS, most of the people, they're not aware that there's a really big problem with that. If you think about DNS, so it's just like a company that's called, sorry, it's just a company that's called like ICANN. There's no going back. So we have to move forward. This is the blockchain. There's no going back. OK, that's fine. So if you think about like, the DNS, it's a company called ICANN, based in the States, that when they started, it was a guy. So whenever somebody wanted to have a domain, they were calling this guy by phone. And it's like, I need this domain. So the guy was like writing down, OK, what's the name of the domain? OK, I'm going to give you a .com. And then he was like giving, and this is going to be your IP address. So this is how it started. The bad thing is like, few decades later, and it has not changed that much. It's still completely centralized. And I think it's around 90% of the domains are owned by just 3 companies. So ICANN, they sell domains. That means that they can decide who will resell these domains to. So most of the domain system all around the world, it's basically just that, a big business. And of course, it's centralized. But it has a lot more problems because it's not attached to the data. When I have like my own domain, whatever like you want to have, context.com, whatever domain you have, it's not really my data. It's just like a pointer. It's just a way of saying, no, no, no. You will find the data there in that server, one or more servers. So basically, you do that, and then you go to that server. It's like, oh, I want to find that data. And it's also not there. It's HTML. That means that DNS is just pointing like to presentation of data, but never to data at all. That's the first problem. Second problem, I can buy any domain. It doesn't matter. I can buy Nike dot whatever and then fake that information. And it's a bigger problem than you think. Let's do this. Like, think about how much it's going to cost to companies like ours the fact that anybody can buy a domain and just put the data there. What would you say, like, it's the price that next year companies are going to spend? And it's crazy. More than $10 trillion are going to spend next year just because of this. If you think of that, that's a lot of money. And that's because I think they choose the wrong business model at the beginning. They just were thinking, OK, that's cool. We're going to do that. Even more, biggest problem comes like not just from this, but from AI. Right now, the way that people, probably you do the same. Like when you look for something, I used to use Google back in the days. But now, I just go to ChatGPT, Claude, whatever tool there is, and I ask anything there, OK? If you want to learn anything about like any project, any data, whatever, I have to go ChatGPT and ask. But then usually most of the times the answer is like, I don't know, I was trained 3 years ago. And yeah, you laugh because you know that's true. It's like, I have no idea. But then most of the time, there's something in AI called hallucination. It becomes too creative. And the reason is that they have been trained using data and internet. So basically, they were like looking at Google, different places. They were like getting a lot of information. And of course, there's no way to verify that. They have no way of verifying if that information is true or not. Once again, like they don't have any data governance at all. Probably you know where I'm going to. Thank you. So big problems. 90%. It's a multi-billion-dollar owned by ICANN at the moment, by an American company. And then more than $10 trillion will be lost just next year due to this. But then if you think about the market at this moment, like data storage market, is around 200 billions per year. But then the growth is more than 20%. So it's going to get crazy. But have you played with AI? Probably you have. So if I want to create any domain with any data, for me, probably will take minutes. Even to create a new web page. Right now, even I don't need to do a web page. I just go to Canva, buy a domain, any domain, just put data there, and that's it. We're ready to go. And we have no way of verifying that information. Then, back to the problem, but of course, like you say, no, we have ENS. And yes, that's true. We have a different name services based on Web3. But we have the same problem. I can just go there and buy the domain. I think the biggest problem with most of the name services we have in Web3 at the moment is that basically they're replicating the same model. But if you think about DeFi, sometimes it's almost the same. It's like, OK, we can have like, we can do all of the innovation in the world. We can do anything with that. What are you going to do? I'm going to do bonds. Yes, amazing. So we are having the same problem with Web3 that we have with Web 2. We never learn about that. There was an old idea a long time ago at the beginning of the internet. There was this guy, Tim Berners-Lee. Have you heard about Tim Berners-Lee? OK. So this guy, he decided to invent internet. And at some point, he saw that it was a big problem because the data was not verified, and then data was always hidden in HTML. So he was thinking about, why don't we separate presentation from data? HTML from the data that's inside of the HTML. And then if we do that, also one of the cool things is that we can create relations between data, because it's not inside of the HTML, so it's about a product. It's about a movie. It's about whatever. So I can create relations with other data, like who's the author, who's the maker, who's doing things. So crazy enough, this guy goes to everybody. It's like, OK, I've had this idea. I'm going to call it the semantic web. And I'm going to call it Web 2. Then Twitter happened, Facebook happened, everything happened. But Tim never gave up. Tim had a mission. So basically what Tim did was like, he organized a big event in San Francisco, really big one. Big one. So gathered everyone there. It was 2012, something like that. And then he announced it that he was solving the problem. Finally, semantic web was going live, and he had a name for it. Can you guess the name he had for the semantic web? Web3. Quite original. Failed again. He didn't succeed. But that idea led to a lot of people working on this. Why don't we have just like data separated from presentations? So we can focus on data, we can verify data, we can create relations between data, and we can structure data. If we have this like big database with a lot of data, with a structure, then yes, we can train an AI model and then have information real time. So things change a lot. But we still don't have that. So we need a solution. And that's something I've been working on for a while. But then it's you know, probably you've had this feeling when you're an entrepreneur, that you have this crazy idea. And it's like, I'm great. I've had this idea. It's as great as I felt the time I sold 1 Bitcoin to buy a dinner in Indonesia. I felt great, by the way. I felt so smart at that point. But it's always a problem. And this is a problem that a lot of people, smart people, has been working for a lot of time. And then the answer was quite simple. If you have DNS, that's the source of all of the problems, because DNS is pointing to the data. Why don't we put the data inside the DNS? That's one thing. It's a good solution. And then, why instead of like having somebody selling something that they don't own? Because it's crazy, because at some point our DNS is the identity of our companies, or our own identity, probably more than our national identity card. But then I cannot buy to GoDaddy to buy an identity card. Probably that would be fun. That's a business model. But imagine that you just go to GoDaddy. It's like, OK, give me Nike.com. Thank you. Amazing. No, I don't have it. Then give me Nike.xyz, Nike.org. Until I find eventually a Nike that works for me, and then I just put a lot of data, and I have my email with Nike.whatever. If it's not Nike.com, I can say like Nike.com, and then I can just like send an email pretending I'm from Nike. So the idea that anybody can buy a domain, it's quite crazy if you think about it. And then this domain points to, you know, whatever server, just an IP. It can be hacked. It can be a lot of problems in the middle. So why don't we just get this data related to the domain and we put it on blockchain? Like right now, at the moment, we're working with Arweave, Filecoin, and we're integrating a few others. So first thing, like data, it's self-sovereign. It's not your money, not your kids, not your money, but with data. Not your data, not your money. Second thing, treat TLDs as DAOs. And it's quite simple, but it's powerful at the same time. And it's something that probably when Tim Berners-Lee decided to do this Web3, his own Web3, he never thought about like using DAOs for that. But then like TLDs, everybody have heard about TLDs, top-level domains. It's like .s, .com, .org, it's a dot, whatever. By the way, it's only 3 companies in the world selling all of these domains, which, once again, is crazy. But then if instead of selling domains, we verify the names, then suddenly everything changes, because then we have like all of the data that's self-sovereign, link it to the DNS. But the only way to get the DNS, it's not just buying it. It's just like verifying that it's me. You can verify in quite simple ways, like you can have TLDs that they are local for cities, or you can have TLDs that they are like based on a product. But then you can create a way of, with data governance, being able to verify all of this information all of the time. So, no, I don't forget to talk about AI. If you have this, decentralized, self-sovereign relational data, you can create like, I don't know, probably I'm gonna use like the example. That's something we're already working on. Like one of the first use cases we were working on was with the wine industry. And it's quite simple. The wine industry, they don't have any control on their branding. Even like whatever. Imagine that basically I'm in the wine industry and my wine, it's amazing. It made a 95 Parker. So now that my wine has a 95 Parker, I can sell a lot more of my wine. No, unless somebody knows that that's true. So I need a way to send this to everybody. Right now, the only way that I have to do is like going platform by platform, reseller by reseller, calling them, and then telling them to change everything. Why? Because in my DNS, I don't have data. There's no way that they can find this data. If we do it the other way around, we can use all of this information to send it to everyone. But because this information is in blockchain, it's structured, and it's public, I can like train an AI model automatically using like RAG, by the way, on AI, but I can get real-time results. So if everybody's using a chat to talk to a wine, whatever, and I was like, I want a wine with a Parker 95, I know that. Just after the winemaker changing that answer is available on the chat. So I have real-time updates, and I have full control of my branding. And then like my logo is in the DNS. It's not somewhere else. It's not on server. It's based on the DNS. If I change my logo, everybody sees that automatically. Same with the picture of my wine. I can do that automatically. Imagine that we can do that not just with the industry of wine, but also with the industry of music. Why not with the industry of tokens? Imagine that creating it out. So if you have a token, and to get a token, you need to verify that it's you. You own that name. You own that ticker. And then you can add as many data verifiable, on-chain, immutable, as you want. So I can put like, this is my contract. This is my security audit. This is like all of the information I want to have. And then I just need to verify this automatically. We did a few experiments with that. Even like I could check if someone was working for the company just from Telegram bot. So asking the Telegram bot, is this guy working at this company, yes or not? So the kind of innovation we can build just like by getting trust on the DNS, something that we don't have. And we don't have because, shit, it's hard. Let's try again. Yes, thank you. 1, 2, 3, fuck DNS. Thank you. So we can have a lot of innovation just by creating this. But then, it's amazing just for one company. Yeah, it's great. My wine, okay, I can just spread information about me. But then, if a lot of people does the same, then I have like probably the biggest database of the wine industry. That's completely self-sovereign. Nobody owns that database. Even the standards, we are not using standards. I come from an industry where we had to do standards with W3C. Fuck them too. I don't believe in standards anymore. I think like everybody should use their own schemas, and then schemas by adoption, they become a standards. It's like RC20, but for data. So we can do that. So that's it. Any question, I will be around. And the only last thing, I want you to repeat with me, and this time with feeling. Come on. 1, 2, 3. Fuck DNS. Thank you.
Sounds good.
Testing, testing. Everyone hear me? Yep, nice. Okay, I'm Lawrence Ray, as you can see up there. I'm a product lead at BitRefill, and today we're going to talk about real-world assets and their tokenization, digitization. Very exciting, I know. And today I'm joined by Nicola Marcella.
Hello,
I'm Nico. I'm legal partner at Store Partners, Geneva-based consulting firm for blockchain and Web3 companies.
And Edwin Mata.
Hello, everyone. My name is Alwin Tan. I'm the CEO and co-founder of Bricken, tokenization plug and play for the financial instruments being embedded on chain.
And Alessandro Brigato.
Hello, everybody. Thanks for the invitation. It's a pleasure to be here. I'm the CEO of Tokenox, tokenization platform based on Algorand blockchain to manage, store, sign every kind of digital file, and is a product of Blockchain Italia, where I am project manager. There is a leading Web3 software house in Milan.
And Mohammed Salman.
Hi, everyone. I'm coming from Dubai, chief mate of InvoicePay. We are a decentralized factoring platform, and that's what we'll be expressing, how RWAs are basically enabling DeFi investors a new primitive.
So really, just to introduce in this context, real-world assets are, well, they are real-world assets. So you're looking at things like, there's many examples, but gold and oil and houses and watches, and there's various options here. But really, what we're talking about here when we talk about the digital future of real-world assets is we're referring to the process of taking these real assets and then converting the ownership rights into a digital token on a blockchain in most cases. And so this can have multiple benefits, which we'll talk about in a minute. But really, to get us going, guys, the first question I've got here is when it comes to this tokenization process, how does this work? And what are like some large benefits of this, really, at the moment? I think we'll just start with the basics.
I'll jump in. So, I mean, the fact of breaking something kind of makes sense, but it's not the only thing that we have to focus about when we tokenize any kind of asset, right? So breaking something into tokens and facilitating the transaction between parties is one of the characteristics, but we also have to think about like the less intermediaries into the process. So if I have a financial instrument, we in equity debt, and I want to capitalize myself, what I want to do is be as lean as possible to get to my capital objective. With blockchain, you can go directly from issuer to investor, and then also with the asset settlement. So less transactional fees are being between the issuer and the investors, so more capital is gained. Cross-border capitalization. It's not so easy to get capitalized in the same like region maybe, but when you go abroad between continents, it gets complicated. So all the characteristics of the blockchain of how it was built, if you embed that into a financial instrument, what you have is optimization and efficiency. So I think during the past year, we've seen kind of like the marketing scheme saying it's about democratization. It's just a single part of the whole process and the goods that actually tokenizing financial instruments on chain can bring.
Cheers. I mean, I think like, did you mention the, because I can't hear you too well, but did you mention basically the increase in liquidity, I think it was that you mentioned then?
I didn't, but yeah. All of these characteristics, just by tokenizing something, you don't make something liquid. You make liquid something by accessibility.
Right.
So the more accessibility and the more barriers you break, the asset by itself become more liquid. It's not by default that tokenizing liquidity gets embedded. It's by how easy it is for somebody to start investing into the asset, to start transacting, how much capital you start making it more wider to a wider range of possible investors. That is where you can start generating liquidity. But liquidity by default does not come on the tokenization layer.
Gotcha, okay, yeah. So essentially, yeah, this is like the first step. You still have the hard work after to actually get people interested and things like that. Mohammed, please.
Yeah, I'll just add to it. Everything evolves, and assets are also evolving now. It's an age of digitization. So tokenization of assets are basically just a new evolution for the assets. More access, more liquidity, more, like again, different revenue streams coming out of those assets. Access simply, it's not just available for one geographic location. It's global now, 24/7. Tokenization is normally associated with fractionalization, I agree. So yeah, again, this is just one of the features which is enabled for the assets, for like gold and other bonds and other things. So it's just a new iteration, a new evolution for the assets with more features powered by the blockchain, which is a technology.
Gotcha. When you mention fractalization, are you talking about, so for example, if I have a house, you could potentially tokenize it and then have 10 different owners of the house quite easily, rather than in a traditional sense, it becomes quite difficult.
10 or even 10,000. So this is generally like you need to buy something big. You generally offer it to the pool of people, Let's say even if you want to get investment for a company, you offer it on a share basis in the different exchanges. So now with this token thing, you can raise investment, you can fractionalize or divide your asset, a bigger asset, into smaller chunks, offer not just the let's say yield at the same time, staking offers more yield as well, and in the long run that asset is growing with its valuation, and of course you are also being a fractional owner. You can pass it to others on different channels. So this is a big, as I said, evolution. It's just one of the features.
Gotcha. I think one thing that I was going to ask is, say for example, I or anyone out here, say we want to tokenize something that we're selling, right? Whether it be coffee we're selling or apartment buildings or whatever. I know, Nicola, we spoke briefly about this earlier. How would you go about doing that? Like, I remember you mentioned that, okay, essentially set up a company and then they'd buy. Like, if you could talk us through that process, that would be helpful.
There are
many
different ways,
yeah,
exactly. Yeah. So indeed, actually, when you say, let's say, what is tokenization? For me, being a lawyer, like it's a very specific thing. It's attaching a set of rights to a token. This is tokenization for me. And this set of rights can be of a different nature. So for instance, if you tokenize real estate, one very practical way is to allocate the real estate assets inside an SPV, like a company that has really this purpose, and then you tokenize the shares of the company, and you sell these shares. Or you could even do it in different ways. We did it for a client of mine. Basically, there was this SPV that was issuing not his shares, but bonds, and these bonds had basically guarantee over the real estate, and they were paying out a coupon, and the amount of the coupon was variable based on the performance of the underlying real estate assets. So depending on the rents and the proceeds generated by the real estate assets, the coupon was varying in a fork depending on certain percentages and KPIs. I think that was a very clever way as well. And then there is the direct tokenization. So when you really have tokens, even NFTs more commonly, that are certificates of ownership of a certain asset, and this works well when you tokenize, I don't know, luxury watches or diamonds or these kind of things. And then the token is really just a certificate of ownership that proves that basically you can go to the custodian and claim your asset by delivering the certificate. So these are just some ways in which you can do that.
Gotcha. Okay. No, thanks. I think, I mean, obviously you're a lawyer here, so maybe you're the best one. But I'll ask everyone here. I mean, like, there's got to be. What are the kind of regulatory and legal hurdles that you might come across when you're working in this side of the industry? Because, like, imagine there's many, right? Different countries, different assets being tokenized.
Well, yeah, there are many. In particular, if you speak about real estate tokenization, that's a complex one. Like, tokenizing directly the real estate assets is almost impossible. In every country, the transfer of real estate is highly regulated. You often need a notary, and you need public registers and so on. So it's not feasible to have the real estate assets tokenized, and then you have 1,000 owners, and they should all register in the registry. So you need something in between, like a company. And then the other kind of incongruencies in tokenization is the nature of the token that you are going to create. So when you tokenize through an SPV and you're tokenizing the shares, that's a security token, because those are shares that are tokenized. Instead, when you tokenize watches or diamonds or these kind of things, this thing of the certificate of ownership is often a bit of a it's a bit of a gray area, but often it's not a security token. At least in Switzerland, it's not a security token. It's just a certificate that you can then redeem. So from a regulatory point of view, I think that the biggest risk is just the uncertainty. But once you have a solid legal setup and you can provide to your users, then I think you're set to go.
You're good to go. Okay. And I think, like, so obviously with us being in the EU right now, and I know there's probably a lot of people here listening who live or work in the EU, when it comes to regulatory framework here in the EU, how is that looking right now? How is that changing? I mean, I'm interested into, because I've heard about real-world asset tokenization for a while, and I'm kind of just wondering, like, why should I be interested now, right? Is there like regulatory benefit right now? Is it developing, or what's the situation, I guess, with MiCA and things like that?
Well, MiCA doesn't really concern tokenization. It concerns it only when it talks about asset reference tokens that are tokens backed by real world assets, like, I don't know, a commodity like gold or silver and so on. So definitely there is a development in this area, but you have to remember that MiCA is a quite old regulation, because even though the last part will enter into force only at the end of this year, it was drafted many years ago. So a lot of things that we see now in the market are not really there. But you don't, I think if Switzerland kind of brings a message to the world, is that you don't necessarily need new laws, new regulations to face this kind of things. You can adapt the existing ones to even fit with these new purposes.
Gotcha. Okay. Okay. And I know, Mohammed, like one thing I wanted to ask you about. We're obviously talking about here real estate, and we've talked about gold and touched on some of these things. But I know that your sort of use of real-world asset tokenization is a little bit different, working like invoicing and stuff. So I wanted to understand that a bit better.
We have a very different take on real-world assets, and it's basically the real-world revenue that sits on the asset sides of the balance sheet in the bookkeeping. So it's a bit complex, but anyways, it's the unpaid invoices or unpaid trade receivables. That is an asset. Not many people do know about that. They can use it as a collateral to get lending from financing institutions. We are bringing it to the Web3 world, and with the DeFi, decentralized factoring, we are bringing it to the retail investors as well of Web3. Now they have a choice. They have these dual asset liquidity pools which are keeping the highly volatile collaterals like Bitcoin, Ethereum, and they also have now opportunity to invest into these real world revenues of the real world businesses. So now it's an actual real world asset. Of course, the other side, the Bitcoins are also asset and Ethereums, but they have this dual asset liquidity pool issue, volatility and a loss prone. We cover that part with the stable yield coming from the real world revenue, unpaid invoice receivable of real world businesses. So SMEs get benefit out of that. They have these inefficient invoice receivables. Now they can go for an alternate finance. Instead of banks, instead of financing institutions of Web2, they also have now a reach to the Web3 investors who can buy out their receivables.
So I might be oversimplifying a bit, but is it in a sense, again, maybe oversimplifying, but is it in a sense kind of tokenizing the debt that a business has on its balance sheet in a way, or have I misunderstood?
Tokenizing not the debt, tokenizing the receivable.
Right, okay.
So debt is that which is difficult part, so if it is going to be covered or not, but the receivable part is certain to be, it's sitting on the asset side, not on the liability side. Debt sits on the liability side, so it won't be called as an asset. So in receivable, which is an actual asset sitting on the balance sheet on the asset side, so that's why it's more like it can be tokenized and can be used as a collateral for the lending and borrowing proposition.
Understood. No, that makes sense. I appreciate it. And I think, yeah, there's obviously you've got the legal side, you've got the invoice side, which is obviously very different. And I guess more a question probably for Edwin and Alessandro, but obviously, Alessandro, I know you work with kind of like providing like a portal for people to be able to tokenize assets. What's like some of the, I guess, the biggest opportunities you're seeing now? Like, what are the industries or assets that you're seeing that people are really starting to look at tokenizing? And where do you think there's like a big opportunity for people to start tokenizing and investing?
So, the colleagues, the other speakers gave an overview on different aspects, legal, different fields like luxury watch, real estate, and so on. And so I would like just to have a zoom out and why we should tokenize everything, because we can introduce a layer, the blockchain layer, in every kind of digital asset. So we can improve the digital workflows or the digital processes in every kind of digital process. That help us to digitize processes that now are analogic and introduce blockchain in processes where we have many third parties or different bodies. So it's like a layer of transparency between them. Every process that we analyze with the company often has different layers. So you have maybe the payroll company, and then you have the institution layer, and you have many parties that took part on a process. Maybe could be a bachelor, could be a degree, could be a a credit payment title, everything. And if you want to tokenize them, you have more transparency between every part of the process. So it's the first step. So why don't tokenize everything? That's the question. There is not many effort. It's easy to tokenize. The problem is which kind of blockchain, which kind of asset, how can we guarantee the value? For example, Nicola said that in many cases we have a bench of deals, so a bench of contracts that we have tokenized as warranty of, for example, a real estate, because you cannot tokenize, you cannot have many owners for one building. So you can, but it's another kind of contract. And you tokenize the right to have an yield from that token, to participate to the revenue, to trade your token related to that what the Oracle says, because it's not on-chain digital asset, but it's a real estate, so you have to follow the market. You can do that like Bitcoin. Bitcoin is a digital asset on-chain, and you can track with Bitcoin is not Ethereum, but with the exchanges, with the trades, and so on, or for Ethereum, for example, with the DeFi, with the automated market maker. So you need something that give you a value, like an oracle from the real world, or you need someone that has maybe the luxury watch as in a value. So you have different steps, and then the other one is the interoperability. If you start to tokenize, you give transparency, you improve the digital workflow, the processes, and you have a token for everything. So the first application could be, I have to sign a contract. Why don't in the blockchain field? Maybe with the LD wallet, or with the digital identity recognition, or other stuffs. Could be the digital blockchain ID. We know many digital ID that could be reusable, or KYC. And the second step is interoperability. We have many logics in the DeFi space and in the blockchain space where we can maybe, having a share of company or having a share of real estate, we can collateralize or over-collateralize that quote, that share, for having a loan. It's something you already said, that we are going to make liquid a market that is normally and generally liquid, and we have financial benefits and financial perks, access to unbanked people, and we can approach targets that are outside from financial space with just maybe, you talk about luxury watches. I see that Audemars Piguet, Rolex, and so on are going trend, and there is an hype, and maybe I can do 20% of yield APY, but I cannot afford 30,000 for a watch, 50,000 for a watch, but I can diversify my wallet with 2,000 in Audemars Piguet, 3,000 in a real estate in Miami, 2,000 in a piece of art. And so maybe even with a small amount, 10,000, 5,000, 500 euros, I can start to invest. And this has never been before.
Yeah, I mean, I think that makes a hell of a lot of sense, right? And I think I understand pretty well, fairly like the process of how to do this in many cases, not all, and also the benefits, which obviously you've stated a fair few there. But I guess one of the things that comes to mind right now to me is, okay, say I want to do this, I've got something I want to sell, for example, and I want to gain like a larger, market that I can market to and obviously get buyers from. What are because I'm thinking of the risks, right? Like, what are the various like risk vectors, and what kind of risk management are you guys doing? Because, and what are like the weak areas, I suppose, that you're working on, essentially trying to reduce risk in? Like, could it be the oracle as a kind of point of failure or an attack vector, or could it be? I mean, one of the things that comes to mind for me is like, okay, say I want to tokenize, say I have a house and I want to tokenize it and sell it. I have to at least somewhat trust someone there, right? Like whether it's the company that's doing the tokenization or storing the deed or whatever it may be.
Yes, the main risk is related to the code. Even most of the tokenized assets are based on a smart contract. Not all. For example, we tokenize it on Algorand. There are native assets, so they don't need smart contract. But every smart contract has a point of failure. based on the contract, on the standards. There are different standards on Ethereum. The ERC are many. There is ERC20 for fungible token, ERC721, 1155, 3643 for the real world asset. So we have a community that has continued to build different standards and solve the existing needs. So, but we have a point of failure. The other point of failure, of course, could be the oracles, the market, the liquidity, because I think the point of failure is I talk about interoperability, but we have different blockchain and different solutions. So one of, but not just for the real world asset, one of the obstacles we had is the interoperability and the cross-chain technology. Now we are trying to have, we have a lot of multi-chain solution and a bunch of cross-chain solution because the time of the trades sometimes are long and are complex because you have many smart contracts that they has to interact between each other. And so there are some point of failure, but there is not just the monetization and the tradability of this token. The first point, I think, is the tokenization of the asset. And I think there are not many points of failure in that, because you're just going to tokenize maybe a PDF or a file. And so you have a proof of existence of that file, a proof of immutability, proof of paternity, because you have a wallet connected to your digital identity. And you can add different, now maybe when we talk about in a blockchain space, we are used to talk about different silos, blockchain, AI, IoT, and zero knowledge proof, and so on. But I think the merge of these technologies can give us an opportunity because you can have a digital identity based on zero knowledge proof. You can interact with the blockchain with your wallet and maybe it's connected to a UD wallet for the institution issues, or without KYC if you want to stay in the Web3 and you want to be anonymous. So there is some issues. The most one is the legal framework. The most important one is the legal framework. We have to have a standard for digital identity, first of all, and which blockchain we should use. Because when we talk about blockchain, we build on Algorand, Ethereum, Solana, and so on. But maybe we talk with the European Commission and they ask to use Hyperledger Bezos, so Hyperledger like a permission. And so, which is the limits are related to the technology? I don't think so. We also have solution for decentralized storage and so on, the PIN structure. The problem is the institution could understand which is the technology that we can provide to them, and we have to talk with them to create a right balance between the technology that we already that we currently use, like cloud, and the technology that we should use, like decentralized storage, the PIN, and so on.
Yeah, and I understand that like every blockchain and every use case kind of differs, right, when it comes to the benefits and downsides. I don't know, like what are you guys seeing as like maybe the one or two like emerging most popular blockchains for like real world asset token? What are the two main ones that you would see that are emerging for when it comes to real world asset tokenization? I mean,
I would really like to answer that. None. Why is that? Because the Web2 client, which is a financial institution, the real estate company, they could care less about the chain. They just want the user experience that can onboard them, their investors, the capital. So the point of failure is not on the tech side. It's always on the offline. How are you going to digitize the value? Where is your trust foundation? Are you audited or not? Are you embedding that on chain? Because the only thing that matters is the transaction value, right? So the chain is what they've been telling us from the blockchain. Oh yeah, my chain has TPS. We have so many wallets, and then you go in and it's all ghosts. The only thing that matters is, can I embed my financial instrument, real world asset, whatever, online? Because they don't even care about the blockchain. They will never ask about all of that. So it is the duty of us, the tokenizers in whatever format, to provide a great user experience, abstracting the wallet, Google sign in, Facebook sign in, LinkedIn sign in, I don't care, email sign in, abstracting the payment. Why will you pay twice? Gas fee, they don't know what's a gas. The local USDC so many chains, so many USDC. You have to abstract that. And the asset, the receivement. I just want to know where I can enter into a dashboard. I know that my asset is there. If you abstract all of that, then blockchain just becomes a back end, which was absolutely what we were always going for. Blockchain as a selling point has been a big fail, but people keep selling blockchain as a main point. Ask outside of here, of this group, what is the difference between Ethereum and Solana? I will say Rust. Oh yeah, the language. But the rest, they wouldn't even know.
No, that's a fairly good point to make.
I'll 100% echo Edwin that yes, a lot of people miss out the Web 2 element in the RWA space because you are interacting on one side at least with the real world, which is, to be honest, it's not even Bitcoin is the real world, but degens are real world, the DeFi investors are real world, but we call real world the Web 2 side. So Web 2 side doesn't know the Web 3. There is a lot of education required to bridge this gap. Otherwise, this real world asset tokenization will be a dream. The mass adoption will surely be a dream. You need to educate the both sides. You asked about the risks earlier. Risks with the assets is always going to be the fraud element. Whether invoice is receivable, whether real estate, whether you talk about gold, diamond, whatever. Fraud is the biggest risk in this business or in this kind of a genre. So you have to have a very good due diligence. You have to have a very good, like again, a proper business approach rather than tokenization approach. Many projects come every day for tokenizing X, tokenizing Y, tokenizing Z, but they are missing out the business element of it. Tokenization is the easiest part in this business. The difficult part is the off-chain, you can say, the part of the business, which is the real business.
Gotcha. Yeah, no, I get your point. So it's really, yeah, as you say, like tokenizing, I mean, you guys have got that covered. It's pretty simple at this point, but it's more about the trust, the marketing, I guess, like with a lot of things in cryptocurrency that I feel like we're kind of missing out on a little bit is like making it easy. Almost, dare I say, make it boring. Like, my brother uses his credit card. He doesn't give a damn who settles or why or what bank or whatever. He doesn't care. And so, like, I guess you really want it to become boring, really. Like, oh, I just use this because it's easy, and I just tokenize this, and boom, away I go, and I get money from people, and it's just a nice, easy experience. Yeah, so that, it feels like, I guess, well, I mean, it feels like that's one of the main challenges, I guess, that are being faced by everyone here outside of the legal side.
It needs to become more easy, for sure. But also consider the timing. I mean, we are still kind of at the start, and yes, I think, as Edwin said, there is a lot of, let's say, little understanding of the different technologies that run through it, even in people that are, let's say, passionate about crypto and so on. But I think with time, it can come. And now I see, because I see the projects of my clients, a lot of projects in which basically you don't need to have any prior knowledge about blockchain technology or anything to just use the app and purchase and so on. You basically just need to press connect wallet and then it's done.
It gets done. Gotcha. Okay. Well, I mean, yeah. I guess, yeah, that is really the future for most cryptocurrency and blockchain technology companies, right? Is to, in most cases, whether it's B2B or B2C, make it so that you don't have to know about how the tokenizing necessarily works or why you've chose this chain or whatever. You do your thing, whether it be selling houses or storing gold or painting selling, and we'll do our thing, which is the blockchain, the technology side, and so then, yeah, they'll obviously have to trust in you guys, but I mean, every business has to do that in most cases with most partnerships, so it makes a lot of sense. Okay, well, I think realistically we're running pretty close to the end of the talk, so it's probably a good time to wrap it up. But guys, like, I appreciate it. I feel like I've learned a fairly good amount, to be honest. Like, I came into this knowing the basics, asking the dumb questions, yeah, I feel like I've kind of learned a bit, and I want to chat to you guys as well further on from here. More about this and how, like, crazy use cases I can come up with and maybe make me $1 million in the future. But thanks, Mohammed. Thank you, Edwin and Alessandro and Nicola. It's been amazing to talk. And thanks to everyone for listening to us yap on together for the last half an hour. I appreciate it.
Thank you.
Take care, everyone.
Thank you.
grabando. Buenas a todos. Yo soy Adrián Vacas. Hello everybody. I'm Adrian Coase. And we are going to talk about gaming and Web3. We are with people who are very experienced in these terms. And we are going to start. If you want to present 1 minute about the things they will do, and we start.
Hello, thank you for the invitation. I'm Sergi Valero. I'm the CEO of Moonlorian. We are a company that we are builders and developers specialized in blockchain. We develop about more than 60 projects, and we have all kinds of services that an entrepreneur can need to launch a Web3 project or a Web2 company that needs to upgrade to the Web3 world.
Hi everyone, I am Ramon Julià. I'm the CEO of Taitico, and I'm here because we have a very beautiful brand that is trying to explore the new Web3 elements, not just based on one product or a game or something like that, instead some of them. So it's an expansive brand inside Web3.
Hello, Luis Carbajo. I am co-founder of Botun. We are a platform for developers. We provide infrastructure and tooling that make very easy for any kind of developer to build different dApp solutions in Web3. We have a long experience working also for Web3 gaming companies that use some of our modules and services to provide different solutions inside their games. Pretty recently, because in our platform we launched a mini app Telegram game, we are also developing that part of the business, so all related with Web3 Telegram mini app games.
Hello everyone, my name is Gaby Belmonte. I'm CEO and founder of Belafy. Belafy is a platform that gamifies trading, and what we try to achieve is allow traders to compete against other traders instead of competing against the market. So our platform mainly focuses on trying to bring more fun into trading and another way to experience trading. And we do so by making mini games, quick games of trading like Battle Royale, Domination, Survival, game-inspired features, and we are launching our alpha at the end of October. So, yeah.
Okay, they are really interesting people. We are going to talk, first of all, about the technology of blockchain and NFTs. And I want to ask this to Sergi, because I think he's doing some things with this technology. If you can talk about it.
Sure. I think that NFTs, we all know in this area what is an NFT, what are the benefits of the NFTs, but we need to think about what is the history of the last 4 years with the NFTs. We launched dozens of collections, most of them for gaming, and how many people from here have NFTs and minted NFTs for a game, and then the game needed to migrate, changing to another chain, or evolutionate the NFT to a new collection because the new game is not fitting the NFT. Typical, you know, right? So let's talk about the trend of the new technologies helping the NFTs for gaming. For example, at Moonlorian, we identified a tool called DQA NFT Checker, and that tool, what this is, you log in with any blockchain in the world. It's a scanner, blockchain scanner, then identify the NFTs you have in your wallet, and it opens the benefits to apply. Sorry. So it identifies the NFTs you have in the wallet, and then it grants you to use the benefits that the NFTs represent, but then the benefits shouldn't be in the same chain, in the same collection. Can be a video game, can be a discount, a voucher discount for playing a video game, can be a player of the video game, an asset in-game. So the idea is the NFT is the representation of the real value, okay? But for me, and from now, it's an opinion, we can open the discussion here, the NFT is not needed to be used in-game, the exact NFT you have. You can do, but it's not needed. So you can have, use the NFT as representation of any value in the game.
I really like the games that use the NFT that you buy, and it's the same NFT in-game.
Yes.
We talk this.
We have discussed, so I wish to open this discussion. I agree with you. It's very interesting when you can play with the exact character representing your own NFT, but after the fail of the market, lots of collections that needs to be rebranded or wherever, okay? We don't need to focus on that, so we need to open the mind and facilitate facilitate not only the people, we need to facilitate the projects to integrate the chains, to sell the NFTs in the chain that is more convenient for their audience, and to integrate the chain which is more convenient for the game, and maybe it's not the same chain. And if you want to use your exact collection for your NFT, you have technology barriers that we need to make smooth for users and for developers, for game builders, and here, people we are here in this panel as integrators, we can facilitate this task for everyone.
I really agree with your opinion. And Ramon, what do you think about it?
Well, yeah, that's really great because, for example, actually on Taitico we are just facing the situation that we need to choose a chain, and for example we are choosing Immutable X because it's a game changer on gaming scenarios, and yeah, but the token cannot be inside of Immutable X. Well, it can be, but anybody's going to use it. So we need to wrap it. And this kind of technologies that allows you to just, use one asset all around, this makes the barriers go down. And if there's no barriers, it means that, at least I have one phrase that I really love to say. Technology works when there is no representation of technology. I mean, if you have an NFT, it doesn't matter if it's on Binance or Smart Chain or whatever, and you can use it around, that means that the technology is working. If not, if you need to breach it by here, pay assets right there, this is something that normal players will never achieve. So this kind of technologies makes it easier, because at the end, when you play in a PlayStation game, for example, you are not, you don't care about what if your virtual coins are going to be in the phone. Yes, obviously they're going to be. So players are used to that, and blockchain actually have still some barriers that some of them are breaking with layer 2 and things like that. But when we really achieve that, it will be really similar to the normal world, to the Web 2 ecosystem.
You talk about Immutable X.
Yeah.
I think they are doing a really good job.
Yeah.
Because I play Illuvium, and the passport of Immutable X, it's really good.
That's the same. So at the end, you are playing, and first of all, for example, Immutable X, they don't want the player to accept any transaction. Why? Because you're playing. You're not just doing like when you go to buy something on Amazon. No, I'm playing. So if I want to sell something or buy something with passport on Immutable X, they just make it easier. Yeah, and the same with Telegram, for example. Actually, on Telegram, you can pay with stars, and that's crazy because they just anybody knows that you can buy stars with crypto, and you can then change it again. But they are not using the word crypto anywhere, but they do it just. So it's really amazing. We are actually exploring this world with a tap to earn that it's working like a charm, and we are really impressed of the work from the Telegram team and how easy they have made the terrain for the players, because you can be a Web 2 player or a Web 3, it doesn't matter, you pay with the stars, and then these stars come to you. The stars at the end is like a crypto, but they don't say crypto. So there is nothing to learn, nothing. This is what I was trying to say when I said that technology works when there is nothing to learn. It's just a normal path to run.
The case is more easy for the normie people who don't know about crypto, Web3, blockchain, wallet, and all this.
The day that my grandma take it easy to play to any blockchain game, it will be the day that blockchain is correctly implemented all around.
You talk about Telegram. I talked to my community about Taitico, TapTap, and Bottom TapTap. And you want to add more info about this?
We are talking about the future of gaming, and you are describing what Telegram is achieving. We were kind of super surprised. We create a game for our own community to just have fun and learn more about what we were doing in Bottom. We create a Tap to Earn. And we published the game. We tell our community by the end of July. We went on holidays, and during the month of August, that half of the team were basically on vacation. The game was growing so much that people were not talking about the project that we were building the game for, where people were only talking about the game. And that is because that goes behind the community of developers and the people that we were trying to attract, to the point that we decide to really separate the two, because we see that Telegram is really attracting a lot of users, a lot of players. So this Tap to Earn, I think that probably that is going to last, I don't know how long, but the infrastructure that Telegram put together to just make gaming so easy, it has endless possibilities. And once again, in 1 month, just in 1 month, we decided, okay, that really makes sense to separate, create a separate team that will be try to exploit that opportunity. And yeah, it seems magic, because as you said, you have stars, nobody really knows what they are, but they can pay for things in the game. You have a wallet that they connect to get tokens that they can exchange. So everything is easy. And well, the numbers obviously that you have in terms of user acquisition, because a lot of users that are in crypto are in Telegram, are just amazing too. So obviously, to grow your social networks and provide visibility to the project, you are always to rely in KOLs or influencers that are going to explain your project to a wider audience. But a lot of that can be achieved now through Telegram in a different way. And that is what it, for us, has been really game-changing, and we see that's a huge opportunity.
I think that Telegram is a good door for the normie people who use Telegram for other things. And only one click, and you take your wallet. Don't need to know more. And what do you think about this, Javi?
Well, Telegram has been Telegram mini apps, I would say. They have been a disruption in the market for gaming and for many other reasons. I've seen prediction markets. I've seen technology infrastructure even built in top of Telegram. And the kind of games that you can build are really attractive for this kind of users that are used to Web3 gaming. Maybe not that much to the users that are used to play in PlayStation 5 and on their computers. Those games that take 5 to 7 years to build, I believe that this should be the future of gaming in Web3 as well. So, and you can have a wide range of types of games in Web3. Not only the ones that are more, I would say, that keep you hooked, like tapping games and all this kind, but also games that you can play with your friends, that you can play for long hours, like any of us who play video games. We, in PlayStation or in PC, we may be playing for 3-4 hours, maybe, when I was younger, not now. But this kind of players also can be onboarded into Web3. And we need also those companies that are building those kind of projects, Activision, Ubisoft, to start engaging, and they are actually starting to engage with blockchain. Sony is launching their own chain. So we're seeing that the wide range of possibilities that Web3 gaming is bringing to any type of users are colliding all together in Web3, and that is amazing for the technology and amazing for the gaming market itself.
Really good opinions. I'm really agree with the Telegram wave. It's a need to surf it because we are really good profits in this case. And I want to ask you, Ramon, about the normal players, the traditional players. What do you think? They are prepared for do the jump to the Web3 gaming, or the companies need to do more work for introduce them?
No and no. Let me explain. No, they are not ready for that. Why? Because you can, for maybe 60 to 70% of the players are under 18 years old. This means that their fathers are going to be worried if they have a wallet, because actually cryptos, we can like it, but they are not a blank brand. I mean, they have some kind of there are still some bad news around. Take a look at Crypto Spain, for example, some days ago. While this stands like this, no, gamers will not be able to enter into that world. But what we need to do at this point is to allow players to play with or without crypto. And yeah, you can do it, and it will be easier. But as soon as the players realizes that they are gonna own their own assets inside of a game, for example, probably some of you have some friends that sell some assets from WoW, World of Warcraft, in some forums, hiding their identities, like, oh no, yeah, this is gonna be easy at this point. And yeah, this is going to arrive, but no, it's not a work to do for the companies, I think. It's a work to do for the governments, laws, and etc. Because while laws, for example, for deploying a token here in Spain, it's just almost impossible. Try to open a bank account and say in your company crypto, and your bank will be your account will be closed in 10 minutes. So this makes us, the entrepreneurs, to make spend hundreds of hours just trying to achieve some technological, and we have the knowledge, but we can do it here. So the problem is not the companies. I'm sure that the people that are here are completely prepared to deploy any kind of game. The thing is that we can't do it because the ecosystem, and I'm talking about the laws and the governments, are not ready still for that. Probably because they fear the blockchain. It's public. The information is public, so governments like to hide some information. So that's the point. So no, the short answer for me is no, not yet.
I think crypto is not family friendly for no. Spain is not family friendly for crypto. Europe in general, yeah.
Europe, yes, can I disagree in one point? I agree that there is a problem in the gamers, that if the player is under 18, can be a problem, can be, but we have solutions at the end. The assets maybe cannot be real digital assets, can be just, the companies can just use the blockchain to store on-chain with transparency the movements of the game, but the player, if the player have no access to the assets and cannot resell P2P and so on, I think we like the decentralization and so on, but for that use case, if we do a service with custody, we can use blockchain for transparency in-game without giving access to the asset under 18 people. So that's a solution. And the other question you ask is about the companies are prepared. At the end, the big companies are the biggest prepared, but they don't know because they have the audience. The game works if they have audience. If you start from scratch a new game, it's very difficult to launch the game and have the audience for the game. But if you are a big company with already players, it's very easy for you to launch a new game, a new blockchain game, and have the audience there prepared and have a success. So, but they don't know that they are really prepared.
It's more easy convert the people than teach them.
Yes, always, yeah. Always. Obtain a new base of users costs hundreds of millions of euros. It's crazy.
Okay. And what do you think about it?
That's a really great topic, but quite honestly, I don't see that the normal gaming is coming to Web3 soon. The main companies that are doing games, and when we approached them in the past, they understand the technology, but that goes against their current business model. That is basically keep all the assets for themselves, so they don't have a real interest. When you talk with players, they really understand that if they will have the possibility to trade an asset of that game, a skin, a weapon, whatever, for money because they spend a lot of time trying to get that asset. All the players will understand that, but that will mean that that asset has a value that is outside the company's or the publisher control. And they don't like it. So the current gaming companies, they don't like that approach. That together with the bad reputation that Web3 gaming have in the past is putting for them the perfect excuse to say, oh, you know, this technology is not really for gaming because it's for speculation, da, 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 da. So in my opinion, the revolution is going to come from young companies that are betting on, they are incumbents, they are fighting against the big publishing gaming companies, providing a different experience, providing this open economy in which the players have their rights, they own the assets of the game, but it's going to come from outside the gaming industry, the current gaming industry. So the future of Fortnite and all the kind of big names that we know in the gaming industry are going to come from Web3 games that are doing an excellent job of providing a great, great game that have that implemented. It's not going to come from the current Electronic Arts or other kind of publishing companies. It's not coming from those. So that's the way it is. So we just need to keep investing in teams that, as they want to have a part on that big, big industry, they are going to disrupt how the people play. Because when you explain to the players, they get it. But these companies, they are not interested on that part. So once that happens with one or two examples, all the publishing companies maybe are they going to go there, but until that happens, it's going to be a long journey. That is how I see it. So for that reason, I was thinking that the Telegram, that is casual games, not like super games, is a very easy way and introduction to players to all the things that Web3 economy or Web3 possibilities bring to the table.
We need new, fresh players in the industry that we can change the actual system. But
well, we need good games. We need good Web3 games, and if one or two they are able to make it into the millions of players and providing to these millions of players a great experience, people are going to put attention. People are going to say, why in this game I can get my asset and sell it after getting done with that, and in Fortnite I can't. I don't like Fortnite because I cannot sell my asset. So that is how I think is going to change. If not, I see that it's going to be difficult.
The attention is the key. What do you think about this, Gabi?
It's difficult to say something that has not been said because I really agree with Luis. I see that the point that you're saying about big companies not willing to bring their games to Web3 because they are losing control on the assets that they build. And I also agree with the point that it's a great opportunity for new companies that want to go to Web3 to build great games, like games that take 5 to 7 years to build, that there is a lot of talent out there, and there is a lot of talent that is in the, not only in the gaming space, but also in the Web3 space that has been before, and they have interchange in between. So, I lose my point here. So, the opportunities that are for these new companies that are going to bring great games into Web3 is what is going to make all those cash cows and big companies from the gaming industry to move, to pivot to Web3 if they see that are losing the race.
Yes.
If they are not losing the race, they are not going to move. That's for sure.
Really interesting opinions. I think that you say some things that are key for the gaming experience, and the panel is going to finish. We need to cut, but you want to talk the last words about this?
Yes, so I will advise any people on the stage that if they want, if they have plans to develop a new game or a new Web3 application, okay, just find us here in the event. They make the first step, which is watching us, okay? Then the next step is find us here in the event, and we can assess them perfectly and do demos about my tool, about the tap gain from button, whatever. We can do a lot of things for them, so contact us and being well assessed, and please use our services.
Yes. Thank you for coming. Gracias a todos por venir. Esperamos que os haya gustado, and see you the next.
Can I say just one quick thing?
Yeah.
Yes, because as we are DEXT4 Festival and Dextools is all about alpha and good tips for investment, just to say that keep an eye on these kind of tokens that are coming from the Telegram Tom ecosystem. We have one that is coming, so keep an eye on these kind of tokens because it seems that are going to be huge in this cycle. So some alpha for everyone.
Just to say that we have in 15 minutes at 5:30 a trading battle royale competition just upstairs on the first floor. You are all invited, and I'm looking forward to see you there. Thank you.
Thank you.